With schools. Let's take a look at where we are on the futures picture then. 25 seconds or so until the start of the European equity market session. And futures point to the downside. And a lot of this has to do with the link between treasury markets, it seems, and fixed income markets and inflation expectations and into other asset classes. So just how high can treasury yields continue to climb? What kind of impact will that have on equities? We certainly seem to see that in the last few equity trading sessions has been one of the dominant themes. And once again, through the Asian session, we saw equities selling off as a result of partly some of that higher returns that you can achieve on treasuries. So we're down by 0.7% on the MSCI Asia Pacific. Here in Europe, just opening up these markets then, the FTSE 100 first out of the gates down by 0.2%. So we are opening to the downside. And as we've been going through this morning here in Europe, through the early hours and through the Asia session, I guess, we've seen US futures increasingly pointing to the downside as well. The Spanish IBEX now open and down by 0.8%. The CAC 40 in Paris down by 0.7%, waiting for the German market to open. So we get this.
Morning, everybody. Hope you had a good weekend. And right now, I'm going to place a stop on profit for Japanese yen. You can see we follow our trades from last week. We have a position on 105.740. Right now, I'm going to place a stop on profit to 105.760, just right here. Let me point out again the position we had, okay, just 2 pips above our open position. It will be enough to secure our profit. I'll speak to you later.
Seeing treasuries at these levels, or maybe it's the fact that we're seeing treasury yields rise as fast as they are. Is that what's having a damaging impact on risk appetite?
Yes, good morning. I think it is, but I actually think that there is a lot of reason for encouragement by the way markets have been behaving over the past couple of weeks or so. Because if you told me going back to the start of February that we were going to be looking at roughly a 30 basis point rise in 10-year real yields, with US Treasury yields now trading, close to 140, and yet equity markets would have been this well behaved over the course of the month, I think most investors would have taken that. The reason for that is because bond yields are rising for good news. It's because I think conviction in the bounce back in the second half of this year is strengthening, and the optimism, particularly around the size of the next fiscal stimulus package, has strengthened over the past couple of weeks as well. So yes, clearly markets down today. There have been some rotations under the surface that have been driven by this increase in bond yields, but I don't think this is cause for concern so far.
Okay, not cause for concern, but when I look at the sector picture that we see this morning, Hugh, it's really interesting because lots of voices, yours, the Fed, lots of voices saying, inflation expectations are rising for the right reasons. This is all about recovery. When I look at the breakdown of stocks that are gaining today, though, it is only basic resources. That is the only sector in positive territory today. And I wonder if that looks like repricing for the right reasons, or if this is something we should be concerned about. All of the other sectors in Europe move to the downside, but basic resources rise.
Of course, and the one-day move is always going to be slightly difficult to tie into a broader narrative. But I think if you do look at a sort of 3-4 week picture, it's much more encouraging that. We've seen the natural types of rotations that you would expect as bond yields are pushing higher. So the financials, for example, being one area that are catching a bid. Defensives, utilities, for example, coming under a bit more pressure. So this market is one which is telling you that it's a more cyclical environment. I think it makes sense in the context of what we're seeing in terms of growth expectations. Credit is one area where I think the picture is slightly different, because we've spent a lot of time over the past few months following this move tighter in credit spreads and really thinking very hard about how much further that has to go. But for credit investors today, in a multi-asset context, your returns are going to be driven by the duration component. This is no longer going to be a spread call. And so particularly if you look at investment grade indexes that have been lengthening in duration very significantly over recent years, I think that's an area where there perhaps is a little more pause for thought, given that the dynamics now between IG and high yield, I think, do tilt quite clearly towards the lower duration indexes in high yield being much more attractive today.
So when it comes to credit, are you not concerned, Hugh, about a period where Western governments perhaps would have been very generous, supported businesses that will survive and also supported businesses that sadly won't, and we might see a sort of day of reckoning which would be damaging to credit investors? Is that not something that matters? Is that because that might happen, but it might only be in the smaller caps?
Yeah, I mean, really, I think if you're looking at the way in which your returns are going to be driven in credit this year, where interest rates go, where government bond yields go, is going to be the primary factor there. And so clearly spreads are tight. Clearly there are still risks to the lowest quality companies. But I think if you're having to make that asset allocation call within credit, I'm willing to take on that extra credit risk and sort of company-specific risk in order to be investing in a lower duration index. You simply want to be ensuring today that if you're investing across the fixed income universe, you're thinking first and primarily about where you think nominal bond yields are headed.
And if you're looking at the various sectors that you want to get exposure to at this point, then, Hugh, and back to the equities conversation, is it some of those value names that you talked about? Will we continue to see a better performance from the likes of the banking sector? Is that where we focus our attention over the next few months as economies open up, or is it elsewhere? Is it still technology?
No, I think that's right. I think you're going to have to be shifting portfolios this year to benefit from the shift that we're expecting in the global economy. We think that there is a very strong bounce back in growth to come in the second half of this year. And therefore, that rotation from last year's winners really to last year's losers has further room to run. What's really interesting at the moment is that I think the most value is clearly still left in the more service-oriented parts of the stock market. And that is simply where we have the least amount of clarity about when those sectors are going to recover. So we're expecting news from the UK Prime Minister today around the path out of lockdown. But I still think we're going to learn very little about actually when you can expect restaurants to be back up to full capacity or airlines to be working close to full capacity, for example. And so when you're looking through those value-oriented names or industries, paying close attention to balance sheets is going to be very important. This is different to the normal start of an economic cycle where you'd be tilting, frankly, towards the lowest quality stocks as those you would expect to outperform. I think you're going to have to stick with that quality screen on balance sheet strength for much longer into this cycle.
Okay, interesting stuff. And in fact, we will pick up where you left us off there, Hugh, in our next conversation. Hugh Gimber, JP Morgan Asset Management Global Market Strategist. He stays with us, and we'll turn our attention to the roadmap for UK reopening. The Prime Minister outlines his plan to lift lockdown curbs. We will discuss the market impact next. This is Bloomberg. Welcome back to the European Market Open. 10 minutes into a European trading session that shows some weakness. Many sectors here in Europe negative territory. Not so the mining sector, though. Mining stocks doing pretty well, and so that helps the London market outperform just a little bit, but still in negative territory. Let's get a Bloomberg Business Flash. Here's Laura Wright in London. Laura.
Thanks, Anna. China is calling on the Biden administration to scrap tariffs, putting the onus on Washington to repair their fractured relationship. China's foreign minister told a forum in Beijing that the two sides should reopen some channels of dialogue that were cut off under the Trump administration.
More than ever, China and the United States are capable of getting big beneficial things done. Under the current circumstances, the two sides may start from easier things, interact actively, and build up goodwill. We hope that the United States side will adjust its policies as soon as possible.
An explosive engine failure has showered debris over a Denver suburb. U.S. regulators are ordering emergency inspections of the Boeing 777 engines made by a division of Raytheon, with Japan and Korea halting flights. The plane in question landed safely back in Denver, and nobody was injured by the falling debris. Iran has offered a last-minute compromise to international atomic inspectors that stops short of completely curtailing their monitoring powers. Instead, the International Atomic Energy Agency has won a partial reprieve for 3 months that it will give hopes to diplomats time to resolve the dispute. That's the Bloomberg Business Flash. Anna.
Laura, thanks very much. Laura Wrights here in London. So later today, UK Prime Minister Boris Johnson will outline how the government plans to lift the national coronavirus lockdown over the coming months. He's expected to announce that all schools in England will reopen from March the 8th as the first step to reopening the economy. Hugh Gimber, JP Morgan Asset Management Global Market Strategist, is still with us. And Hugh, you led us into an interesting thought in our last conversation, which was about the types of businesses that will be able to bounce back here and the types that won't. We saw at the time that the pandemic really hit, I suppose the market didn't draw much distinction between global aviation businesses and those that operate pub chains, but actually they will behave very differently when it comes to the reopening story.
I think that's right, because the other piece of the puzzle here is which sectors the government are going to work hardest to protect. Because clearly for the past 12 months or so, really, the government support has been very broad-based. And there, quite rightly, has been no way in terms of trying to distinguish between those sectors where the pandemic is going to have the longest lasting impacts versus those that might be facing more temporary disruption, because that has simply been an impossible question to answer for most of the past year or so. Going forward, I think the government is going to start to get a little bit more specific about where they're willing to provide that support. And so if you take the airline industry as one example, that would be one which would be very, very difficult for the government to simply say, we're going to step away from and let other players, come in and take over businesses if they do come into trouble over the next few months. And so, yes, there are going to be differences around the sector sort of composition and those that can bounce back earliest versus a bit later, but also that government support is going to be really significant for share prices. We're seeing that playing out in the US. You take an example of the performance of US airlines versus US hotels. In theory, two parts of the stock market that are similarly exposed to this reopening story, but actually experiencing very different performance given that importance of government support.
Yeah, I guess even at least in the US, if you're in aviation, you might have more of a domestic story to cling to than you do when you're here in Europe. But really interesting. So I suppose, do we look for the budget, Hugh? Do we look for the budget to offer some way forward on more sector-specific support? Then is that a realistic expectation?
I think later in the year, you are going to see that. You're just sort of sand going into the wheels, really, of which businesses are eligible for government support and which aren't. At this stage, this close to a hopefully sustainable reopening, I don't think it's going to be necessary. But I suspect if you were to see the furlough scheme be extended well into the autumn, then that's probably the point at which you would start to see some adjustments coming in. For now, you're getting back on track. You've had a vaccine rollout that's going very well. Personally, I think that the emphasis just needs to be on more support. We've described the government packages like a bridge over troubled water, trying to take the economy from one side of this pandemic to the other. And there's no point in building a bridge that gets you 80 or 90% of the way there. So the emphasis for the March budget, I think, has to be on more support, and that question of a bit more specificity, just starting to put some sand in the wheels as to which businesses would be allowed for ongoing support, is probably one more for the autumn if the economy still needs a bit of help.
And Hugh, just picking up on a conversation we started this hour having, back to the Treasury's story, in fact, and inflation expectations. Just at the bottom of the screen, I see their 5-year, 30-year yields. The Treasury 5-year, 30-year yield curve has hit the steepest since 2014, a red headline across the Bloomberg, so certainly worth just pointing that out. And ties back into the conversation we were having earlier about higher inflation expectations and just how far they run and where that takes us. I suppose when we're thinking about investing around that here in Europe, does that take us into the banking sector? If we continue to see further steepness in curves of various tenors, does that take us into banking stocks, Hugh? Is that where this leads?
It does, because this, for me, has been the missing piece of the puzzle for the banking story over the past few months. You've had a balance sheet strength coming through very clearly during the past couple of earnings season. Banks are coming out of this crisis in very different shape to the way that they did in 08 and 09. You've had the resumption of dividends, both in continental Europe and in the UK, which was another big headwind for banks for most of 2020. And it's been that profitability angle which has been the missing part, held back by very low interest rates and very flat yield curves. So as you start to see yield curves steepen and simply the yield curve moving higher across the board, that for me is the part that gets you much more excited about the financial story, and then starts to help markets such as the UK and Europe with a greater relative weight to the banking stocks versus somewhere like the tech-heavy US market that did so well for much of last year.
Yeah, the London market doing relatively well today based on some of that weighting towards financials, HSBC on the rise and adding some points there. Basic resources, of course, a heavy weight in London, also helping that particular sector. I wonder, back to take this conversation full circle then, Hugh, is there a level of treasuries that would make you question your overweight equities view right now? Because you've painted a picture that's quite positive for risk assets, and I wonder if there's a point at which either the steepness of the curve or the pace of increase in treasury yields or some element of that treasury conversation starts to change your outlook for stocks.
Sure. So for now, the yield curve move, the move higher in bond yields across the board, really, I think is fine for equities because it's being driven by much stronger conviction in the growth outlook. The problematic version of that is one where markets start to question central bank support. And so for me, so far this year, the central banks have got it pretty much bang on for the equity market, particularly the Federal Reserve, in terms of the tone that they've been striking around now not being the time to pull back support and not worried about a pickup in inflation if it's not driven by fundamental factors. If you did start to see markets getting more worried about the central banks really anchoring valuations across all asset classes today, that's when you start to get worried. If this is more concerns about a central bank shock and a central bank mistake pulling back support too quickly than the economy can reasonably deal with. So we're definitely not in this scenario now. And I think if bond yields continue to push higher, because simply that conviction on the growth outlook is improving, that can be positive for earnings expectations, and therefore it can be positive for equities. We'd need to think about the winners and losers in that scenario within the equity market, but it doesn't need to drag overall indexes down.
Hugh, thanks very much. Really good to speak to you. Thanks for your time. Hugh Gimber, JP Morgan Asset Management Global Market Strategist. Hugh will be continuing his conversation with us on Bloomberg Radio at 9 a.m. UK time. Coming up on the programme, Stopping the Spread. An Israeli study shows the Pfizer-BioNTech shot could reduce the transmission of the virus. We'll dig into the details with Sam Fazeli, Bloomberg Intelligence Senior Pharmaceutical Analyst, joins us next. This is Bloomberg.
Okay, as you can see, we closed position just a few minutes ago, just right here on Japanese yen. Show you over here. Okay, well done, all of you who followed the trades. It's worth to hold your position overnight or over weekend. You'll be in profit. Okay, well done.
Affected, providing the first real-world indication that immunization could curb transmission of the coronavirus. Let's talk to Bloomberg Intelligence Director of Research and Senior Pharmaceutical Analyst Sam Fazeli, who joins us now. Sam, good morning. And I know that details around this latest report are sometimes difficult to pin down. But what do we think this tells us? Do we think this just tells us more about efficacy for those who have been immunized, or does it actually tell us something about transmission of the virus? Because the latter would be pretty interesting.
Yes, absolutely. Good morning, Anna. So, unfortunately, I have failed over the weekend to find the actual publication. Now, remember, the process these things go through is first they get, a lot of people put them in preprints, which means they haven't been peer-reviewed. And peer review is very important because other people's eyes see things that the publishers or the authors don't. But bottom line is, whether it's 90% or 95% or 80%, we do expect, and we have seen evidence, that vaccination or vaccinated people tend to have a lower risk of transmitting the virus because they have a lower viral load. But let's not get too excited here. I'm worried that these kind of talks actually make people become a bit cavalier after having been vaccinated. And it's very important to realize that we haven't seen the data yet. And secondly, these are short times after the vaccination when your immune system is at its highest alert. What happens in 5 months' time, in 6 months' time?
Right, and I suppose that takes us on to the next question, because we're waiting here in the UK for further details today about the reopening, and all of the messaging ahead of the communication today, Sam, is that things are going to have to go very, very slowly and carefully. Can you tell us a bit about, in the UK context, why R still matters? If you vaccinate all the people who are at risk, I'm told that R still matters, but I'm not always sure why it matters, so help me understand that.
Yeah, well, if you think about the data, Anna, that we've seen, the vaccine, at least the AstraZeneca one, which seems to be the one that has been mostly used in the UK, takes time to build that level of immunity. You know, the previous study that we looked at, after about 12 weeks, the efficacy is 84%. So we're only just starting, I think maybe in the next few weeks, the second dose of this vaccine. So I think the government would be absolutely right in taking it completely and slowly, very, very slowly, because you don't want to have the same repeat of what we had in November. And you also don't want to be exposing people who only had one shot of the vaccine to unnecessary risk of an infection, because the efficacy is lower after one dose.
And what about the trajectory from here then? Again, in the UK context, Sam, a lot of political emphasis put on coming out of lockdown slowly so that we don't have to go back into another one. But what expectations should we have around the winter, the next winter? Seems awful to ask about that already, but, you know.
Yeah, sorry, I interrupted you there. I think what happens next winter is going to be determined by a lot of other factors, such as variants, such as we still don't know what the durability of protection with these vaccines are. I'm optimistic, even against variants, even for the AstraZeneca vaccine, where a lot of people seem to have got a little too excited about data that we don't have, i.e. we don't know how well the AstraZeneca vaccine protects against severe disease in with the variants, particularly the one that first was found in South Africa. So a lot of what happens next winter depends on these unknowns. So, but I'm optimistic. I think we'll be having a period where severe disease is low.
Okay, Sam, thank you very much. Thanks for joining us. Sam Fazeli, our senior pharmaceutical analyst at Bloomberg Intelligence. Thanks for bringing us the latest details there. Coming up, the economic heavyweights continue to debate the merits of a big stimulus plan. We'll get details next. This is Bloomberg. Welcome back to the European Market Open. 30 minutes into our European trading session for this Monday, and stocks to the downside despite some early outperformance on the London market based around the performance of metals and the banking sector. Some of that early outperformance has been lost, and you can see that the FTSE 100 now in amongst, well, it's in good company, isn't it? Down by more than 1% on the previous close. Let's have a look at the sector breakdown. You'll see some of the stocks that have been doing relatively well and relatively badly this morning. The mining sector is a standout to the upside, but not by as much as it was. In the first hours of trading, we definitely saw much more outperformance from the likes of Glencore and some of those mining companies that are going to do well on the back of what we've seen in iron ore and in copper prices. We also see travel and leisure doing well this morning, but it is more leisure than travel, certainly in the shape of Flutter Entertainment. That stock moving a little higher, up by 1.6% this morning. So to the downside then, technology, retail and media. Let's get a Bloomberg First Word News update. For that, here's Laura Wright.
Thanks, Anna. Well, we might see the London market reacting later because in the UK, Prime Minister Boris Johnson is set to outline his roadmap for lifting the national lockdown. He's set to confirm that all schools in England will reopen from March 8th and announce a slight loosening of social distancing with up to 6 people allowed to meet from the end of next month. 1 in 3 UK adults have now had a shot, with plans to offer the vaccine to all adults by the end of July. The COVID-19 vaccine from Pfizer and BioNTech appears to stop the vast majority of recipients from becoming infected. That's according to the draft of a study in Israel, which hasn't yet been peer-reviewed. It says the shot is 89% effective in preventing infections, the first real-world indication that vaccinations can curb transmission of coronavirus. Saudi Arabia and Russia are again finding themselves on the opposite sides of a crucial debate about the oil market. Ahead of the latest OPEC Plus meeting, Riyadh is calling on fellow members to be extremely cautious despite prices rebounding to a 1-year high. On the other hand, Moscow is indicating it wants to go ahead with an increase in supply. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Anna.
Laura, thanks very much. Laura Wright in London. So US lawmakers could vote this week on President Biden's relief package worth $1.9 trillion. Bloomberg spoke to Nobel laureate Paul Krugman about the proposal and what he thinks needs to be changed.
If you had time and unlimited administrative capacity, and let's face it, if there weren't a political imperative to make good on promises, you might try for something that was a little bit more targeted than that. But, you know, borrowing is cheap. Money is really kind of not an object, amazingly, in all of this stuff. And you really want to get a lot of aid out the door fast. You now have to get people through these 6-7 months of pandemic, and we need to have the economy poised to make a fast comeback once it can.
Okay, well, as you know, better than anybody, you were in a very interesting debate with Larry Summers, former Treasury Secretary. Are we going to put money that is not as targeted as well as it could be take it away from things that we could be putting money into and putting it in the plan right now this year, like climate change, infrastructure spending that would create jobs and help so many people?
Yeah, I have enormous respect for Larry. I always take him seriously, but I think he's making a category error here. He's thinking that the constraint is that we have a certain amount of money and we're going to spend it on this or we're going to spend it on that. But that's not actually a problem. The U.S. government has vast borrowing capacity. And the constraint on doing the things we ought to be doing is not how much money is there, can we afford it? The constraint is actually, in the end, it's going to be political. I'm very much for a big infrastructure invest in the future program, but that's going to be taking place not this year, maybe not even next year, but afterwards. And it's not, the reasons it might not happen are going to be if people feel, well, you spent a lot of money and it didn't work and the economy didn't recover all that well, which is what happened to Obama. So in fact, spending on pandemic recovery now, spending generously, is not a competing with a longer run investment program. In fact, it's a precondition for that longer run investment program. We need to get people back to work, and we need to get people through this with minimum damage. And only then will we be in a position to go about doing the things that Larry and I both agree we ought to be doing, looking past this year.
So
So we know that for countries like the US and China, for example, the ability to service that debt, the ability to borrow, as you say, is not of a concern. Are you concerned about productivity of debt, though? Because if you take a look at the Chinese example, that's the very worry, right? The effectiveness of taking on that debt and how it's targeted.
Well, there's no effective constraint on the amount of debt. I mean, with the U.S., we have just barely got positive interest rates on 30-year bonds now, real interest rates, and still negative real interest rates on shorter term. And with given the fact that the economy will grow over time, servicing the debt is just not going to be a problem. So I really don't worry about it. It's the level of debt is not in my top 10 list of things to worry about, whereas being able to get people through this crisis with minimum financial personal damage is sort of near the top of the list.
Interesting conversation, not worried about debt levels. Paul Krugman there speaking to my colleagues here at Bloomberg. Let's take a look at your week ahead then. We've been thinking a lot about what we might hear from the Fed this week, so important to note that tomorrow sees Fed Chair Jay Powell deliver his semi-annual monetary policy report to Congress. Just what kind of pushback will we see against higher Treasury yields, if any? Also watch out for annual results from HSBC, just as we're talking about that pivot to Asia from that bank, or pivot back to Asia perhaps. Thursday is the start of a two-day EU leaders summit, so lots to talk about there. Travel restrictions and vaccines will be top of that agenda. And on Friday, as mentioned, the US House plans to hold its first floor vote on President Joe Biden's stimulus plan, the topic of conversation that we just saw being discussed there. Staying with those numbers from HSBC, we took a look back at the challenges and changes Europe's biggest lender has faced in the past year.
HSBC targeting a new cost reduction plan.
The bank suspended the share buyback and it's embarking on a huge overhaul. We're going to be quite surgical and ruthless in terms of targeting those parts of the business where we're not generating acceptable returns.
HSBC has appointed Noel Quinn to be the permanent role of CEO.
At this time of absolute turmoil in the financial markets and the global economy, the bank has clearly decided to opt for the steady hand.
HSBC dropping 7.1% in Hong Kong after axing dividends over the coronavirus.
The British management must be changed because it is a Hong Kong-based bank.
European banks basically being hit by a perfect storm here. People are now beginning to seriously question whether HSBC's model of being domiciled in the UK is sustainable.
The outlook for 2021 is still uncertain, so we want to retain some buffer for that uncertainty.
Caught in the crossfire, HSBC Chief Executive Noel Quinn will face UK lawmakers this week. The bank is facing scrutiny over its move to freeze the accounts of Hong Kong activists.
We've worked with Hong Kong over that time in both good and bad times and challenging times. Today is a particularly challenging time, I fully acknowledge that. If the question was, am I willing to walk away from Hong Kong, the answer is no.
HSBC is very strong in Hong Kong and has been a very important part of our financial industry. So, of course, I would love to see a stronger presence of the bank in Hong Kong.
Yeah, certainly a business caught in the cross currents of global geopolitics. More on HSBC then as we go through the week. As we mentioned, we'll be returning to that story. For this morning, though, let's get back to the market moves and what we're seeing in markets this morning. And Danny Berger has a breakdown for us. Danny.
Anna, that's right. G4S, the biggest mover to the downside when it comes to the stock 600, down nearly 10%. This is going to be its biggest decline since April of last year. And this is because the bidding war between Garda and Allied for this private security firm, it's been put on hold more or less. They're not upping their offers for the company. Allied, which has the biggest offer at the moment, it's offering 245 pence for the company, currently trading below that at the moment. We heard strong words from Garda saying that they can find a better company given the risk and given the price that they were offering, or at least asking for G4S. Delivery Hero, we're also seeing a lot of these stay-at-home online plays suffer today, down more than 4.5%. With the UK speeding up its timeline for the vaccine, everyone getting one by the end of July, that means companies like Zalando, Delivery Hero, HelloFresh, Ocado, all of them are falling today. But really, the bright spot when it comes to equity markets, and really the only sector that's gaining today, is metals. And Antofagasta. It's off its highs today, now up just 0.5%, but still the copper miner benefiting from the move in copper. And let's go ahead and take a look at that move in copper because it is headed for its longest winning streak on record. It was up as much as 3% today. At the moment, up 1.3%. Goldman saying that the inflation trade really getting a big boost today with China coming back online after the holiday. And this roaring inflation trade, when we see the 530 spread at the most steepest since 2014, no wonder the equity market is getting spooked. In Europe, we're seeing stocks down more than 1%, but globally, we are seeing equities weak because of the inflation trade, because of real rates, at least for 30 years in the U.S. moving positive. It means the equity risk premium is no longer attractive as it once was. So finally, we're seeing this inflation trade start to impact equities, Anna.
Yeah, interesting. I was asking Hugh Gimber a little earlier about, what level of treasuries would make you question your positivity around global stocks and risk assets, and he's still sticking with the global stocks for now, but it's certainly a conversation that will run and run. Danny, thank you very much. Danny Berger with us on the markets. Coming up on the program, U.S. sanctions on Nord Stream 2. The new administration is likely to omit German officials as it tries to ease tensions with its European ally. More on that geopolitical story next. This is Bloomberg. Welcome back to the European market open. 44 minutes into a negative session for European equity markets. The FTSE 100 down by 1.1%. The worst of the losses of the major markets, the DAX down by 1.3% this hour. Concern around inflation expectations, how quickly they are shifting in markets, how much higher we're seeing treasury yields go and the steepness of the curve and what that does as a rival investment to global stocks. Let's get a Bloomberg Business Flash, some of the top corporate stories we're covering this morning. Here's Laura Wright.
Thanks, Anna. Just days after chatroom app Clubhouse said it was working to ensure user data cannot be stolen, at least one group has shown its live audio can be tapped. An unidentified user was able to stream the app's audio feeds from multiple rooms to a third-party site. The Stanford Internet Observatory says users should all assume conversations are being recorded. Bloomberg sources say Paul Singer's Elliott Management has built a position in Principal Financial with plans to push for changes at the life insurance company. The hedge fund is nearing a settlement that will grant it seats on the company's board and see it launch a strategic review. No comment from either firm. Around 1,000 EU finance firms are expected to open their first offices in the UK after losing passporting rights due to Brexit. Roughly 2/3 of the 1,500 companies that have applied for regulatory permission had no physical presence in Britain beforehand. That's according to records from the Financial Conduct Authority obtained by consultancy firm Boville. That's the Bloomberg Business Flash. Anna.
Laura, thank you. Laura Wright here in London. Now, the Biden administration singled out a Russian ship for violating U.S. prohibitions on constructing the Nord Stream 2 pipeline. Notably absent were any German or other European entities also aiding construction of the pipeline. That's as the Biden administration seeks to halt the project without antagonizing a close European ally. Critics argue that while the move may ease tensions with Germany, it risks alienating other allies such as Ukraine. Joining us now is Stephen Pfeiffer, former US ambassador to Ukraine and Robert Bosch Academy Research Fellow. Stephen, very good to speak to you. And I wonder if you could give us your insight then, your previous role in Ukraine, so very much familiar with that story, but currently still resident in Europe. How different is the Biden administration going to treat this geopolitical difficult area, if you like? How differently is the Biden administration going to treat it versus Trump? Because in earlier years, we'd certainly heard Biden be fairly negative on Nord Stream 2 as well. But it does seem as if already we're seeing some different handling.
Yes, Anna, well, I think you actually described the dilemma well that faces the Biden administration. On the one hand, the Biden administration does not like Nord Stream 2. There is very strong opposition in the American Congress, both from Republicans and Democrats alike, to the completion of the pipeline. But on the other hand, the Biden administration does not want to get off to start with a big fight with Germany. And so there's this dilemma. They're caught between, on the one hand, Germany, and they're caught between Congress and then other American partners in Europe who oppose Nord Stream 2. So I think what we're seeing is they're trying to figure out how to walk that tightrope.
Yeah, indeed, how to walk that tightrope. I mean, how much of an imperative do you think for the administration it is that they have some influence on Nord Stream 2? How far up the foreign policy agenda is this?
Well, I think it's the concern about it's fairly widespread. I think the Secretary of State is directly involved in this question. And again, they realize it's going to impact relations both with Berlin, but it's going to impact relations also with other allies and also with the American Congress. And I think it's important to bear in mind that the Democrats, they hold a slight advantage in the House of Representatives, but it's a razor-thin advantage in the Senate. It's a 50-50 tie that has to be broken by the vice president. And so they've got to balance this on what issues do they want to alienate the Republicans in Congress. And I think that's the dilemma I think that they're trying to come up with. And, there may be answers, but I'm not sure that we found the solution yet, although this should be a soluble problem between Berlin and Washington.
What would a solution look like then, Stephen? I know that you just said we haven't found one yet, but I was reading that some have suggested maybe Germany can go ahead and use Nord Stream 2, but also build some infrastructure to accept US energy assets. I mean, does that sound like the start of a solution, or does that not go far enough?
That may be part of the solution, but I'm not sure it's going to be enough, because critics will say, even if you build the infrastructure, typically gas that's shipped by pipeline is still going to have a competitive price advantage versus gas that's shipped as LNG. So that may not really solve the problem. In the same way that some have suggested that there could be an agreement in principle between Washington and Berlin that if the Russians particularly were abusive towards Ukraine or really had human rights problems, then Germany might turn the gas flow off. But again, I think some of the skeptics will say, well, that's fine in principle, but when you get down to it, what happens if the Americans and the Germans disagree on what is really an egregious misbehavior by the Russians? What I would suggest to add to this is right now Gazprom puts for the next 3 years about 40 billion cubic meters of gas a year through Ukrainian pipelines. And I wonder if Berlin could work with Moscow and Gazprom to extend that contract in terms of adding years on, and then perhaps to raise the amount per year. That might be a way then to resolve the situation, because that would be a tangible victory for Ukraine. it would give the administration in Washington a reason to go to Congress and say, we're not going to sanction the pipeline because we've achieved this for Ukraine. And that should be something that I think might be a win-win-win. It would be certainly a win for Ukraine, but it would also be a win for both Berlin and the United States in terms of avoiding this becoming a difficult issue.
Let me ask you, we've got a question in from a viewer, Stephen, which I want to put to you. Somebody asking how it is possible that Europe has to allow US Congress to have extraterritorial influence. How would the US react if the EU Parliament would do the same? I suppose this goes to the use of sanctions, and certainly the use of sanctions as a foreign policy tool under the Trump administration was on the rise, wasn't it? And we did see Europe respond in some cases also. Would you expect to see a continuation of the use of sanctions in this way, or will that go?
Yeah, no, and again, I think certainly in terms of sanctions on Russia, there's a lot of cases where there's U.S. and European agreement. But again, this is part of the dilemma that I think the administration faces, is that if you get Congress basically pushing for sanctions on secondary sanctions on European companies, then we take an issue that should be between the West and Russia, and it becomes a divisive issue in the transatlantic relationship. And I think that's one of the things that the Biden administration would like to avoid. That's why I hope Berlin and Washington could work out some kind of solution to put this issue behind them, because there's a lot of issues, and we saw this on Friday at the Munich Security Conference, where you had, I think, very positive indications from President Biden, from Chancellor Merkel, in this desire to reinvigorate the transatlantic relationship. It'd be ideal if they could find a way to make Nord Stream 2 not be a problem for that.
Okay, that'll be good. Stephen, thanks very much. Stephen Pfeiffer, former US ambassador to Ukraine, and Robert Bosch, Academy Research Fellow. Thank you very much for joining us. 8:51 here in London. Quick check on the markets for you. US futures, in keeping with the negative picture we've seen for risk assets here in Europe. US futures pointing to the downside. S&P futures weaker, as you can see. NASDAQ futures increasingly so, now down by 1.5% as you see European stocks put under pressure by yields we're now seeing on US Treasuries. 1.36% is the yield on the US 10-year right now. This is Bloomberg. Welcome back to the European Market Open. 54 minutes into a trading session that is increasingly negative, it seems, for European stocks. European stocks in the red as worries over rising bond yields overshadow progress with vaccine rollouts. Joining us to discuss the markets, Laura Cooper, Bloomberg Markets Live macro strategist. Laura, good morning. Is it the pace at which we're seeing Treasury yields rise, or the levels that we've got to, that's really spooking stock market investors, do you think?
Well, I certainly think that it is the case that it has been the pace of yields, notably when we look at the real yields backdrop. So we've seen the 10-year U.S. real yield climb about 25 basis points over the past week alone, which is quite an exceptional move. And I think what we're seeing this morning is just equities catch up to what we've seen in terms of the bond sell-off. But again, I think at the same time, we do have a heavy week of central bankers ahead. And so I think really the moves that we're seeing will test their resolve to continue being dovish. And I would be surprised to see Powell tomorrow not kind of allude to potential changes in their strategy.
Right, that's interesting. So this could be a really important week, given how much movement we've seen in Treasury yields, an important week for thinking about, well, for understanding what the Fed thinks about that.
Oh, absolutely. And, you know, the Fed has said that now is not the time to exit. They're still focused on the labor market recovery with 10 million Americans still unemployed. So they want to keep this pace of accommodation ongoing. And they're going to welcome a steepening in the yield curve so long that it's reflective of growth prospects. But it is the challenge is if we continue to see yields continue to climb higher on markets anticipating inflation, that could feed into tightening financial conditions, which they're less likely to tolerate.
Yeah, always be careful what you wish for, I suppose. Laura, thank you very much. Laura Cooper, Bloomberg's Markets Live macro strategist, rounding out this second hour of the European Market Open. That is it for this program. Surveillance Early Edition is up next. Francine Lacroix will be here taking you through the latest moves in European equity markets as we see that sell-off roll through into US futures. This is Bloomberg.
spending on pandemic recovery now. It's not a competing with a longer run investment program.
There'll be a strong recovery, especially if Biden's recovery rescue plan gets enacted.
We're now on track to have enough vaccine supply for all Americans by the end of July.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Welcome to the Bloomberg Surveillance Early Edition on this Monday, the 22nd of February. I'm Francine Lacqua here in London, and here's what's coming up on the program today. Inflation expectations while copper rises to its highest in more than 9 years. On recovery hopes, the bond sell-off continues as a 530 yield curve hits its steepest 2014. Back to school, the UK is set to outline its roadmap for easing the lockdown, starting the schools on March the 8th. Children return to classrooms in 10 out of 16 German states today. And grounded, Japan orders its airlines to halt flights for all Boeing 777 with Pratt & Whitney engines after an explosion spread debris over Denver on Saturday. The U.S. FAA calls for inspections on all similar craft. So let's get straight to the markets. In a busy Monday morning for bond traders, with the U.S. 530 yield curve hitting the steepest since 2014. Now, the more striking move may also be in commodities. Copper at the highest level in nearly a decade. It's also set for an unprecedented 11-month climb. Now, Danny Berger joins us with the very latest to break down the move. So, Danny, what exactly is driving the markets these days?
Well, look, as you say, it's really all this inflation bet. And, you know, before it started as something that really had to do with stimulus. It had to do with vaccine rollouts being sped up. But now looking at what copper's done, it's turned into a story that really the metals are playing an effect here with the higher prices because of the recovery. So when you have copper, as you say, on track for an unprecedented move higher, we're seeing things like the 5-year, 30-year curve hit its steepest level since 2014. So no wonder equities are getting spooked at this level. Finally, we're getting to a place where the equity risk premium no longer looks as attractive. So you can see there, Francine, Europe stock 600 down more than 1%.
An explosive engine failure on a Boeing 777 in Denver has grounded 69 planes. Danny, how will this actually impact the company and also hurt global travel more?
Well, there's one fact in here that most of the planes that have the that are 777 from Boeing and also have this engine are grounded because of the coronavirus pandemic. But that's part of the problem here, Francine, is this comes at a very, very sensitive time for the industry. So Boeing pre-market down more than 4.5% at the moment because this really just adds to the to-do list for Boeing of things it needs to deal with. It needs to see what U.S. regulators are going to be looking at. It needs to examine this. And as Bloomberg Intelligence says, this may lead to them ending the early versions of the 777 quicker because it's too costly. So really, this doesn't really mean that there's any really big issue with the 777 itself because it was really confined to the engine and turbine here. But it just is another headache for a company which only last week saw its first flight using the 737 MAX, Francine, which of course was grounded for more than 2 years.
Danny, thanks so much. Our Danny Berger there with some of the stock moves, and of course we'll have to look at what Boeing does pre-market. Now, Germany's IFO business confidence for February rose to 92.4, coming in above expectations. The outlook also surprised to the upside, while the closely followed indicator relies on survey data from roughly 7,000 participants across industries who assessed their current business situation and outlook for the next 6 months. The data comes as children in 10 out of Germany's 16 states return to schools and daycares for the first time in weeks today. The prospect of further easing were also downplayed by the health minister Jens Spahn, who said the impact of the move could have to be carefully evaluated before other steps would be taken. Well, joining us now to discuss the pandemic, and of course is academic economist and IFO President Clemens Fuest. Mr. Fuest, thank you so much for joining us. So we look at the numbers, we look at exactly what this means going forward for the reopening of the German economy. Where are you seeing weakness, unexpected weakness, and where are you seeing strength in the German economy?
Good morning. Well, the strength is clearly in manufacturing. We've seen that for some time now. It's really a divided economy, so we have very strong readings from manufacturing. And this is also having an impact on services. The service sector, of course, is important, and more industrial activity means more orders also for service sectors, for logistics. The weakness is in retail, of course. There we saw the reading plummeting last month, and it's still fairly down, stabilizing, but at a very low level. And in construction, we had unusually cold weather that has had a negative impact, but that's probably just transitory.
What can Germany do to have a better rollout of the vaccine or more access to vaccine doses? It didn't exactly go to plan with the EU. Is it stuck in this position?
Yes, that's a very problematic issue. We are very slow with the vaccine rollout, not just in Germany, but in the EU as a whole, and that will hold back the economy. Of course, it has a huge impact on health. More needs to be done. I suggested, and others have done so as well, to introduce premia for faster delivery. At the same time, it's clear that we need to put all energies into capacity increases. That's not easy because this production is complicated, but there's very high priority. There's also an issue about the AstraZeneca vaccine. So some of the available vaccines are not used. That's very bad because they may not be as good as the BioNTech Pfizer vaccine, but they are still effective in preventing bad illnesses or deaths. So they should also be vaccinated. They should be used.
Yeah. Mr. Fuss, I was going to ask you actually about AstraZeneca, because in the UK, frankly, there's really no difference between the Pfizer one or the AstraZeneca one. That's not the case in Europe. How do you get back from that?
Yeah, I mean, there is this difference in effectiveness, but so AstraZeneca is less effective than the Pfizer vaccine, but it's still effective, almost 100% effective in presenting difficult cases or deaths. Insofar, there's a problem. At the same time, AstraZeneca has cut down its deliveries to the EU, and there is a lot of anger about that. That needs to be clarified.
What can you tell us, Mr. Fuss, about what companies are worried about apart from vaccines? Is it, Brexit access? Is it delivery access to some of the goods, or is it semiconductor shortages?
Well, semiconductor shortage is an issue, especially in the car industry. And then we have the border closures to the Czech Republic, which interrupts value chains in Germany, also in the car industry. So that's a big issue. If that increases, that could be problematic. We need to be fast enough in introducing smart border controls, meaning let the goods transport pass and maybe just prevent travels like tourism that can import the infections.
Where do you see the Biden administration so far? Has it been helpful for Europe and a rapprochement between Germany and the US, or is it too soon to say exactly what they'll do with China?
It's very helpful. At the Munich Security Conference, Biden made it very clear that there is a strong commitment of the US to NATO. It will not withdraw its troops from Germany, so that removes a lot of uncertainty. What we will not see is a quick reopening of negotiations on things like TTIP, so broad trade liberalization. Still, the administration is open to discuss liberalizations in certain areas. It will be easier to address the conflict in the aircraft industry. So the Biden administration has a huge positive impact on Europe, no doubt about that.
When will Europe reopen its economy? When are you expecting Germany to go a little bit back to more normal way of the economy and our way of life?
We need to see that currently a large part of the economy is open in Germany. We at IFO estimate that 3% of all value added is shut down at the moment. That's too bad for the affected sectors, hospitality in particular, but a large part of the economy is open. Opening the rest will take time, because what we see is that due to the mutation of the virus, we have two pandemics at the moment. So the wild type is declining. declining, but this mutated type is expanding. So it will be very difficult to relax this further. A lot will depend on whether Germany in particular changes its testing and tracing strategy. If we get better on that front, we can also open up more. But so far, we haven't seen that, unfortunately.
Thank you so much. The IFO president there, Clemens Fuster, joining us this morning. Now, coming up, Boris Johnson outlines his reopening plans. What does this mean for the British economy? Up next, we speak with someone who might have an answer. Well, BlackRock's superstar economist and former UK Treasury official Rupert Harrison joins us. If you have any questions for him, just IB me or the team on IB Plus TV. This is Bloomberg.
It is critically important that the markets stay open in this time as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance, the early edition. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. An explosive engine failure has showered debris over a Denver suburb. U.S. regulators are ordering emergency inspections of the Boeing 777 engines made by a division of Raytheon, with Japan and Korea halting flights. The plane in question landed safely back in Denver, and no one was injured by the falling debris. Protesters are swarming the streets of Myanmar in what may be the largest protest since the coup on February the 1st. The unrest is escalating after 2 demonstrators were shot dead over the weekend. Shops and businesses are expected to close in solidarity. Many bank branches are also closed, fueling concerns about the financial system in the country. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, later today, the UK Prime Minister Boris Johnson will outline how the government plans to lift the national coronavirus lockdown over the coming months. Now, he's expected to announce that all schools in England will reopen from March the 8th and that people will also be allowed to meet one-on-one in person outdoors. Now, joining us to talk about this and to talk about some of the pound calls out there, just below 140 at the moment, is Rupert Harrison, BlackRock Multi-Asset Strategies Portfolio Manager, former Chief of Staff to UK Chancellor of the Exchequer George Osborne, and also former Chair of the UK's Council of Economic Advisors. Rupert, schools are reopening. First of all,
Morning.
A lot of people are so excited about that. If you look at the vaccine rollout, does it really support sterling at 150?
Look, I think that the challenge there is going to be the dollar side of that pair, because I think we're seeing a kind of repricing of economic growth, fiscal stimulus, real rates rising in the US. But I think the sterling is well placed to benefit from various factors. We've got a global cyclical recovery that markets are rushing to price, and sterling should be supported by that. The UK has been particularly hit hard by coronavirus in recent months with a very heavy lockdown. It's a very service-orientated economy, stands ready to kind of benefit from that reopening trade. And of course, the vaccine rollout, the best of any major economy, I think inevitably that does support the UK economy. So all those things are positives. I think that the Brexit issues are more of a kind of micro challenge for particular segments of the UK economy. It's not really anymore a macro issue for the UK economy. And when we look at a lot of UK assets, particularly, for example, UK equities, we still see that they are pretty under-owned by international asset allocators. And so there's scope for more flows into those risk assets.
Rupert, Bloomberg senior editor for markets, John Authers, has a brilliant opinion piece out there this morning, and in it he basically argues that the post-Brexit bull case is getting stronger. He says that sterling remains competitive and has room to appreciate much further. All in all, actually, John Authers claims that while Britain shot itself in the foot with Brexit, it didn't shoot itself in the head. Really, it's a great opinion piece. When you look, Rupert, at all of the narrative around that, what will the UK actually become post-Brexit? It's still, the jury, I guess, is still out on whether it becomes a Singapore-on-Thames or something else.
Well, look, I don't think it's going to become a Singapore-on-Thames. I don't think there is the political will in the UK Parliament to do radical deregulation. I think where there is a lot of appetite in the UK government is to use smart regulation. And I think that they would appeal to the vaccine rollout as an example of the UK kind of getting ahead of the curve, using its sort of nimbleness as an individual country. And they are looking to try and recreate that in areas like fintech, biotech, new technologies. And I think that's a big part of the kind of post-Brexit agenda. Of course, there will be some headwinds. There clearly is going to be some activity that's going to continue to move from the UK to the European Union, whether that's in sectors like autos, where there are these very, very tightly integrated supply chains that may struggle at the margin with some of the higher trade barriers. It's probably going to be true again at the margin in financial services. But we've already seen that, while you do get some activity moving, the bulk of the city and the sort of agglomeration effect of the City of London is still holding and is still very powerful. So, look, I love that phrase, shot in the foot, not shot in the head. I think there is still a lot to like about the UK economy, particularly at this point where you've got a kind of global cyclical recovery taking place.
Rupert, is there what are you expecting actually from the Chancellor in March for the budget? Is there a danger that he raises taxes too quickly or tries to balance the books too quickly?
Look, I think that obviously there's a lot of focus on that. You're getting quite a different tone. It's very striking, actually, when you look, the UK economic policy debate is very different from what you're getting in the US, where the debate is all around quite how enormous this fiscal stimulus is going to be, even on top of the already very large fiscal stimulus that we've had. Whereas in the UK, a lot of the debate is around how big is the hole in the public finances, how quickly or slowly should the Chancellor move to deal with that. I think that Rishi Sunak is very, very aware that he must not move too quickly to tighten the overall stance of fiscal policy. I think you will still see a very, very supportive fiscal policy in the UK, and that will be through a very gradual phase out of the furlough scheme that's doing so much to keep unemployment down. I think you're going to see continued ramping up of government spending on capital investment, science, infrastructure, and so on. But I think that, I think he's probably quite conscious that not only is there an economic cycle, but there's also a political cycle in the UK. And if you're sitting in number 10 or number 11, you've got an election in 3.5 years' time. You don't want to be raising taxes then. So I think we may see a sort of the beginnings of moves to put in place measures to start fixing the public finances over the next few years. But I think it's going to be very gradual. And I think that the major focus is still very much going to be on the economy, getting unemployment down, keeping unemployment down, but trying to kind of walk that difficult balancing act between, at the same time, putting in some measures to fix the hole in the public finances.
Rupert, thanks so much. Rupert Harrison there of BlackRock Multi-Asset Strategies stays with us. Shortly after 5:30, we'll speak to Rupert about Biden's stimulus plan, what it means for the economic theory around inflation. We'll talk treasuries, and of course, we'll talk about the yield curve. Now, coming up, stopping the spread, an Israeli study shows the Pfizer-BioNTech shot could reduce the transmission of the virus. So we dig into the details with our Sam Fazeli, Bloomberg Intelligence Senior Pharmaceutical Analyst. That's coming up next, and this is Bloomberg.
stunning when you look at the numbers, almost unbelievable, but it's true. This is a devastating pandemic, and it's historic. People will be talking about this decades and decades and decades from now.
Some pretty somber words from Anthony Fauci as COVID-19 deaths near 500,000 in the United States. Now, there is some promising news from the world's most vaccinated nation. New data from Israel shows Pfizer and BioNTech's COVID shot stops the vast majority of recipients becoming infected. Now, it's the first real-world indication that immunization could curb transmission of the virus. Now, for more on all of this, let's get straight to Bloomberg Intelligence's Director of Research and Senior Pharmaceutical Analyst, Sam Fazeli. Sam, you say watch out because this is not a trial, so we don't exactly know what numbers we're looking at.
Yeah, we don't exactly know what numbers we're looking at, Francine, because we haven't actually seen the numbers. It seems like a select few people have seen the paper. I've looked everywhere to find the actual article, and I can't find it. And we have to be very careful when we do this because, as you rightly said, it's not a trial. It's comparing one group of vaccinated people to a control group that they try and structure. So I am, as you know, very optimistic about vaccines. And we have seen anecdotal data that suggests 50-60% reductions in infections. But 89-90%, it sounds a little far-fetched, and I would love to see the data and be wrong in my view that it's far-fetched.
What is the most important thing if you look at herd immunity? Is it that you don't get infected, or that you can't pass it on once you're vaccinated, Sam?
Yeah, well, I think we will all be perfectly fine if we just caught the SARS-CoV-2 virus, had a cold, got over it, and went back to work. So what we need is a vaccine, which is what they're doing at the minute. That's what we've seen with them. It's significantly reducing to even zero levels severe, critical disease and hospitalizations and definitely deaths. So if we have that, that's perfect.
Sam, thank you so much. Sam Fazeli there, senior pharmaceutical analyst at Bloomberg Intelligence. And of course, we'll have plenty more on the trials. We'll have plenty more on some of the things in terms of vaccine doses, where they're produced, and how much more access the EU can have to them. Here in the UK, it's a big day, certainly if you're a parent of a primary school child, because we're expecting Boris Johnson to say that all schools in England will reopen from March the 8th. Coming up, throwing down the gauntlet, Joe Biden's stimulus plan challenges economic theory. Many economists come around to the idea that their inflation fears may have been misplaced. So we'll look at treasuries with BlackRock's superstar economist, Rupert Harrison. We'll also talk a little bit more about sterling. Maybe we'll also talk about U.S.-China dynamics. And of course, we'll continue watching the Boeing story. I don't know if we have Boeing pre-market, but certainly it was a pretty difficult weekend for Boeing. This is Bloomberg.
Another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
I was actually poor.
No foreplay?
eat your bag of Lay's with a smile on your face.
If all the diseases have been taken, I'll take a tax.
Inflation expectations. Copper hits its highest in more than 9 years on recovery hopes. The bond sell-off continues as the 530 yield curve hits its steepest since 2014. An explosive engine failure has showered debris over Denver suburb. U.S. regulators are ordering emergency inspections of the Boeing 777. Pre-shares of Boeing market drop in pre-market. And European news publishers turn up the heat on Facebook. An Australian-style approach may be in the offing. Coming up, we speak to the former European Commission Vice President, Viviane Reding. Well, good morning, everyone, and welcome to Bloomberg Surveillance, the early edition. I'm Francine Lacqua here in London. So, President Biden plan to flood the American economy with almost $2 trillion in coronavirus aid may come to a vote this week. If the stimulus package passes, this could see a change in the U.S. government's approach to spending. Now, many economists now believe that fears of inflation tied to excessive fiscal spending may have been misplaced.
You really want to get a lot of aid out the door fast. You now have to get people through these 6-7 months of pandemic, and we need to have the economy poised to make a fast comeback once it can.
I'd rather see us investing money that expands the economy's capacity than simply making transfer payments.
We are hoping that there'll be a strong recovery. There's every reason to believe we will, especially if Biden's recovery rescue plan gets enacted.
Spending generously is not a competing with a longer run investment program. In fact, it's a precondition for that longer run investment program. We need to get people back to work, and we need to get people through this with minimum damage.
Well, let's get back to Rupert Harrison of BlackRock Multi-Asset Strategies. Rupert, when you look at treasuries, when you look at the yield curve, how does this end?
Well, I think the direction of travel is still higher yields, steeper yield curve, because the market is moving to price in now what I think we're going to see this year, which is a very strong global cyclical recovery, very, very large fiscal stimulus in the US, and this reopening trade. I think very short term, we've seen a very, very sharp move, particularly in real yields, both sides of the Atlantic, about 25 basis points in the last 8 or 9 sessions. And that's pretty rapid for a short-term move. I expect we probably will see some pause for breath at some point in the next week or two. But I still think the direction of travel is gradually higher yields. We've got very, very strong, powerful global forces pushing in that direction. We do have a Federal Reserve in particular that is in a new regime. They are going to stay loose for longer than before. We are going to get a US economy that is running hot. It's going to be the economy that Janet Yellen wanted when she was at the Fed, and now she's sitting in the Treasury, and she's going to be delivering that running hot economy. And the Fed will try and stay dovish for as long as possible. But the direction of travel for yields over the course of the year, I think, is still a gradual rise.
Rupert, when you look at the market dynamics, where will we actually end on inflation? And is there anything that looks like it's in a bubble right now, or is it just a repricing and we need to see how fast it gets to where it needs to be?
Yeah, so on inflation, I think we are going to get pretty rapid moves in the data, particularly between kind of March and May, June, because you're going to get 3 factors coming at the same time. You're going to get base effects, so the year-on-year numbers will start to look very large. You've got commodities feeding into that, and of course you've got this reopening trade. I think you'll see in some of the service sectors, as you get the reopening trade into the summer, you'll see price rises supporting the inflation figures. So we could see some pretty large headline and core inflation numbers through that sort of, as I say, March to May, June period. But then in the second half of the year, that probably will fade. Some of the slower moving parts of inflation are going to continue to be a drag for the time being. So I think there's this short-term inflation sort of spike, if you like, the Fed are trying to prepare the ground for that. We've heard the chairman and others saying, look, there is going to be a spike in inflation. We're going to look through it. But I still think the market will be quite focused on that. I think the longer term inflationary picture is probably more muted and a much slower moving story. You know, I don't believe that this fiscal stimulus is going to ignite quickly a big inflationary spiral in the US. There's too many forces pushing in the other direction. But if you think about the kind of on a 3-year horizon, the balance of risks now is you've definitely got a much bigger area to the upside in terms of inflation risk. And so you're getting inflation in that sort of 2 to 3% range in terms of core inflation in the US is possible now on a 3-year horizon in a way that it hasn't been before. I mean, for markets, you know, the real issue, you mentioned bubbles. Look, valuations are looking stretched on some measures, but we're still in a regime where real yields, I think, are going to be relatively contained. The Fed is not going to let them get out of control. They will lean against a steeper yield curve to some extent because they want to see this overheating economy. And I think that's still broadly a supportive environment for risk assets. So I don't see some kind of generalized risk to valuations on a 6 to 12 month horizon. There's still plenty of forces that are pro-risk.
Do you like anything in the emerging markets right now, or do we still need to figure out what the U.S.-China relationship looks like?
Yeah, I think that actually in emerging markets is sort of outside of China and Asia is where some of the interesting possibilities lie. I think that some of the markets, whether it's kind of LATAM, South Africa, Russia, India, if we do get this kind of cyclical recovery, particularly some of those markets supported by commodity prices, then there's room for further rallies. I mean, it's interesting, on a day like today, you're seeing some of that high yield EM assets getting hit by stronger real yields in the US. But as I say, if that turns into a more gradual rise, then I think EM assets can probably absorb that. So, I still think, yes, there is a sort of cyclical play, but we've seen such strong rallies in China and Asia that I'd probably look elsewhere within EM.
Rupert, what do you do with European assets? So we have Mario Draghi, who seems to, or at least the market are seeing him as, the savior of not only Italy and Europe. Is there too much expectation that actually can change structural issues in the country?
I think there probably is. I think you have to differentiate still between the tactical trade in Italy, where we still want to be long BTPs. We still think that the kind of short-term story in Italy is a good one, and the Draghi effect has not yet fully been priced. I think you have heard people making a kind of bigger argument about structural reform in Italy, that this is we're going to get on a multi-year horizon now a kind of revitalization of the Italy kind of growth problem. And it is fundamentally a growth problem in Italy, not a balance sheet problem. I'm a little bit more skeptical of that. I think the barriers to change in Italy are going to take a little longer to overcome. Within Europe, again, the cyclical story is there. It's still like European banks, still like energy, materials exposure. But, I think the one note of caution is that it's not a normal cyclical recovery. If we look at the sort of manufacturing sector, particularly if we look at the sort of China exposed complex in Europe, that has already done very well. You've already seen very, very rapid growth in global manufacturing. Obviously, China's been growing very strongly. Both of those impulses are probably peaking or close to peaking. So in a sense, it's within cyclicals, it's more of the reopening trade. And I would include banks within that, and probably energy within that as kind of places to look.
Rupert, thanks so much. Rupert Harrison there, BlackRock multi-asset strategy portfolio manager, former chief of staff to the UK Chancellor of the Exchequer, George Osborne, and of course, former chair of the UK's Council of Economic Advisors. Now, coming up, European publishers turn up the heat on Facebook after the company spat with Australia. We speak to Viviane Reding, Luxembourg MP and former vice president of the European Commission on Tech Regulation in Europe. This is Bloomberg. finance politics. This is Bloomberg Surveillance, the early edition, and I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Good morning, Francine. HSBC is considering returning some of its global leaders to the bank's original hometown, Hong Kong. Sources tell Bloomberg some senior executives are set to relocate in the coming months, reinforcing Asia's role as its center of gravity. The bank is reporting earnings tomorrow when it will begin marketing what is known internationally as its pivot to Asia. Just days after chatroom app Clubhouse said it was working to ensure user data can't be stolen, at least one group has shown its live audio can be taped. An unidentified user was able to stream the app's audio feed from multiple rooms to a third-party site. The Stanford Internet Observatory says users should assume all conversations are being recorded. Former Bank of England Governor Mark Carney is joining the board of Stripe. Amid reports the financial technology company is preparing a new round of funding. Carney, also UN Special Envoy for Climate Action, will help guide Stripe in its efforts to bring more funding to emerging carbon removal technologies. And that's your Bloomberg Business Flash. Francine.
Leanne, thank you so much. Now, European publishers are turning up the heat on Facebook after the company spat with Australia. They want to copy parts of a proposed law in Australia that would force tech giants to pay for their content. Well, joining us now to talk tech regulation is Viviane Reding, Luxembourg MP and former Vice President of the European Commission. Well, during her career, Viviane Reding has spearheaded many projects, including the capping of roaming charges within the EU and bringing in GDPR. She's participating today in DLD All-Stars virtual conference this week and will be discussing regulating data usage by big technology providers. So, Madam Viviane Reding, thank you so much for joining us. When you look at some of the regulation out there, and if you look at the difference between Facebook and, of course, what's happening in Australia, do you think this could be a template of how the EU should move to try and change what Facebook does?
It's not only Facebook, it's also Google. It is the big platforms who are living from the content which has been created by artists or by journalists. For instance, here we are speaking about the journalists, and which are not retributing the journalists. For us, it is very important because if we want to have a coherent society, we need to have a media pluralism also, and we have to have journalists living of their task and doing good journalism. And so this is not a new story for Europe. The platforms are struggling with the editors since a decade, I would say. And now we are in the last moments to finish European regulation on copyright, which would bring the responsibility of the content and of paying for the content to the platforms. So that is in the pipeline, and when it will be ready, then the discussion will be finished.
Viviane Reding, do you actually see a lot more regulation in general for tech giants? And does this, once again, become spearheaded in Europe? How will, if we look back, at the end of the year to Google, Facebook, and all the others, how different will they look?
Well, you have seen what has happened to GDPR, there was a real lobby war organized by American platforms against having such rules being established. Europe won, and now GDPR has become a world standard. We see each other on this as standard makers and not as standard takers. And what will be very important, we see each other also as working together with the American government in order to develop the new rules of ethics which we need in a world which will be dominated by big data. I'm speaking about IoT, I'm speaking about artificial intelligence. All this is very good. We need it. We have to have a tech-forward mindset, but also we have to think about the individuals, about the society, and that's why it can only be on basis of rules and basis of values. And these e-privacy, Digital Service Act, and other regulations are in the pipeline and will come rather soon. We would like to do that together with the Biden government and not against it.
When do you see a digital tax come into force, like a real digital tax? I know there's disagreement. Do you think we'll actually see something that's robust enough, and will we see it soon?
Yeah, that is now a completely different problem. That is a problem of fairness in the internal market, in the single market in Europe, where your baker has to pay taxes, but the big platforms don't. And that is not an equilibrium, and that is the reason why, together with the OECD, we are working on a fair remuneration for the state and a fair tax participation in Europe for all the companies who are utilizing the benefits of our external and internal market.
Do you think it will come? I mean, again, there's people that are pushing back against it. A lot of politicians say it's necessary. Does it just mean that some of the business will go elsewhere?
Well, they are allowed to go where they want, but if they want to have the 500 million rich consumers in Europe, well, they cannot go out, they have to be in.
Ms. Reding, are you expecting more cooperation on these sorts of issues with the U.S. under the Biden administration that the EU has had in the past with the Trump administration?
It can only become better. And the fact that President Biden in Munich at the security conference has made it very clear that America is back, America is open to negotiation to find common ways. And I do believe that in this very important domain, because the digital economy will become the most important economy, and you cannot leave it ruthless and ruleless. And that is the reason why we have to agree on the basic rules for the future of our continents.
Do you expect the Biden administration to spend a lot more time looking at digital rights and digital data and how that's used?
It is of the interest of the Americans in general, and of the new American government in specific, to build standards which become world standards. And you can do that with allies who have the same mentality, who share the same visions of the future and the same values. So it would be a normal thing, US and Europe, to sit together and elaborate those rules.
Thank you so much for joining us today. Viviane Reding there, Luxembourg MP and former Vice President of the European Commission. Now, coming up, we hear from Europe's largest tech-only private equity shop, HG, who says that the tech world is woefully unprepared for cyber attacks. That's coming up next in this week's Money Undercover. This is Bloomberg.
Climate change is the defining issue of our time, so we've redefined how we cover it. With clear data and rigorous journalism, we rise to the scale of the challenge to reveal the breadth of possibility. We look at stories from every angle to provoke debate, spotlight solutions, and make sense of the greatest crisis of our generation. Bloomberg Green, solutions for a changing climate.
It is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, despite near record valuations, technology companies aren't due for a re-rating. That's according to HG, Europe's largest tech-only private equity firm. With $30 billion under management, well, HG's total portfolio makes it the second biggest tech company in all of Europe. Our Danny Berger spoke to the firm's senior management partners in this week's Money Undercover. Take a listen.
It's always in a downturn that you have a dramatic move to new technologies like cloud. And that's precisely what we've seen. So for us, HG, we recognize, because we've been investing in software for kind of 20 plus years in a lot of depth, this was likely to happen. We didn't know when the next downturn was going to come. We didn't predict a pandemic, I can absolutely assure you, but we did know that when some downturn came, the acceleration of the move to cloud was going to happen. So we've been positioning our portfolio for this for the last kind of 7+ years.
So then does it mean if you want to go in and you want to buy more companies that look like this, that are more cloud-based, are those opportunities harder to find now because that really is sort of the hot area in tech, Matthew?
There's always demand for those kind of companies, and you can identify them. The tricky part of the game, I think, is the expertise you need to find them at the right stage in their life cycle. So the investment community, the banking community is very good at allowing any software company to look like a cloud company, to present it as a cloud company. The risk at this point in the cycle is people overpay for the old tech because it's still in inverted commas software, and they're not valuing correctly the potential of the long term, the 5, 10, 15-year potential of very, very strong innovative cloud product.
I was talking the other week with Bridgepoint, who said that tech being the only game in town, valuations have gone really high. And once economies get back to normal, they open up, that we're going to see a big repricing of the tech sector because of that. Do you agree? Do you see that as being the case?
I don't fundamentally think so. It's interesting. I heard similar conversations with one or two of my peers, like the firm you mentioned, who are asking the same question. The reality is, I think this cycle has shown the resilience of underlying tech, the value of tech, the pace of adoption of tech, as Nick said earlier on, is accelerated through this process. And if anything, kind of growth, volatility, you've seen the evidence of the value of those elements in these kind of business models. So are we going to see a fundamental re-rating? I strongly doubt it, particularly in a very low inflation economy, right? People are really desperate for growth, and this is where you get predictable growth in many, many categories.
Obviously, you work with a lot of different firms. This is something that at Bloomberg we've covered a lot in terms of different cybersecurity threats. Is this becoming more of an issue? What are you hearing from companies right now?
Yeah, it was a big issue 2-3 years ago. It's an even bigger issue, and there's an arms race that's going on behalf of the kind of bad actors to kind of do more, be more sophisticated.
Danny Berger there speaking with HG's Nick Humphreys and Matthew Brockman. Well, Danny joins us now with the very latest. Danny, great interviews. How does HG's view on tech valuations actually compare to the typical private equity firm?
It definitely differs. And Francine, you'll notice in there, I snuck in a cheeky question about our conversation with Bridgepoint, where they said that they see tech re-rating because it has been the only game in town. And HG just didn't see this. They say it's clear that it's resilient. But part of the reason this view is different from a lot of people we've spoken to, and indeed HG says that they've spoken to, is because of the angle HG comes in at. They're willing to pay more. And they even said this as much to me, because they have a lot of experts, and what they do is they buy a company, they really grow it versus doing bolt-on acquisitions or putting leverage into it. They say that they end up paying more, and they're happy to do it because they see the growth prospects. Of course, really interesting thing is the idea that cloud is going to grow more than anything. That puts a lot of Europe's really big tech companies at a disadvantage. So Sage, SAP, you see here, underperform the general tech index. SAP has even gone so far as to hire an ex-Microsoft employee in order to beef up their cloud business. Francine.
Danny, thank you so much. Some great conversations there with our Danny Berger. Now, Angela Merkel proposes to her party's leadership a reopening strategy for schools and restaurants. The German chancellor has acknowledged the public desire for reopening and says that more testing is necessary. We'll also have Boris Johnson talking about reopening schools for March the 8th. So that's definitely what I'm watching out for. And then later this week, of course, we have the Powell testimony. Bloomberg Surveillance continues in the next hour with Matt Miller and Kaylee Lyons. This is Bloomberg. Another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
Spending on pandemic recovery now, it's not a competing with a longer run investment program.
There'll be a strong recovery, especially if Biden's recovery rescue plan gets enacted.
We're now on track to have enough vaccine supply for all Americans by the end of July.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua, Matt Miller, and Kaylee Lyons.
Live from London, Berlin, and New York, I'm Francine Lacqua with Matt Miller and Kaylee Lyons. Our top stories today. Inflation expectations while copper hits its highest in more than 9 years on the recovery hope. The bond sell-off continues as the 530 yield curve hits its steepest since 2014. Back to school, the UK is set to outline its roadmap to ease the lockdown, starting with schools reopening on March the 8th. Children return to the classrooms in 10 out of 16 German states today. And grounded, Japan orders its airlines to ground all Boeing 777s with Pratt & Whitney engines after one exploded on Saturday over Denver. The U.S. FAA calls for inspection on all similar aircrafts. Well, good morning, everyone, and welcome to Bloomberg Surveillance. This is the early edition. Kaylee, Matt, we have actually quite a lot going on in the markets. I know we look at the yield curve. We look at everything that has to do with commodities. I'm quite excited that schools are meant to be reopened today from the UK, but of course it's a path forward. And we also had some encouraging news out of Pfizer that vaccination expected to stop infections, although Arsam Fazeli says, look, I'm waiting for the trial. I can't find a paper online. So at the moment, it's just word of mouth.
Yeah, it seems like a ton of encouraging news, actually, for a day on which we see equity indexes, at least in Europe, pointing lower. You know, the higher prices in commodities, I think, indicates, and we're going to talk about metals price increases throughout the program, indicates that people are expecting real reflation. People are expecting real growth. You know, the virus infections number turning down, vaccinations are up. So you have to ask yourself, why are markets selling off? And I think a lot will have to do with rates.
Well, here's Kaylee with all of the markets and, of course, all of the answers, as always. Kaylee.
I try to have all of the answers, Francine, but I want to start with what Matt was just speaking about, which is the surge in metals prices. It really is quite phenomenal. Take a look at copper in the London trade, surging above $9,000 a ton. That is the highest since 2011. Really, all of this reflationary trade, expectations of stronger growth would lead to higher demand, it is thought, for copper and potentially create a supply squeeze driving prices higher. It is really broadly across the metals complex, but commodities broadly are rallying as well. Brent crude's trading above $63 a barrel. Goldman Sachs out with a note overnight saying it could go as high as 75 by the third quarter, given all of the supply and demand dynamics right now. Francine, you mentioned that yield curve. We are a little bit flatter in this session, off the steepest level since 2014, but still the spread between the 5- and 30-year yield sitting at 155 basis points. And as Matt pointed out, that is weighing on equity futures, it seems. The S&P 500 looking to open lower by around 0.7% as it stands right now. And speaking of lower, I want to take a look at the shares of Boeing, which are sinking in pre-market trading, down about 3.5% after, as you said, Francine, that 777 had an engine explode over Denver. Now, it was a Pratt & Whitney engine. It isn't necessarily a problem with the 777 itself, but it has led to the jet being grounded in Japan. The FAA is looking at it, and really is just another headache for Boeing. The 737 MAX just starting to fly again, plus global aviation still in crisis. All of that means this is an issue that Boeing really just does not need right now, Matt.
Yeah, absolutely. And that's another thing we're going to be talking about. I think one of the most fascinating stock movers stories we'll be looking at. I have a chart here that at first glance looks like a lot of spaghetti, but it's actually quite basic. So what you see in yellow is interest rates over the last 2 years. They took a dip, obviously, in March of last year with the virus, but now they're coming back up. And the other important line to look at, I think, is the white one. That's CPI X food and energy. Of course, oil has made headline CPI rise a little bit, but if you look at CPI, the core number, it's actually come down over the past few months. So it's interesting to see rates rise as inflation comes down, Fran, and I think this is maybe confusing to people who are wondering why the reflation trade in that case.
Yeah, I think it's all about the reflation trade. I mean, I guess it depends on whether reflation trade or the fear of the future Fed actually win. To talk about all of this, Patrick Armstrong, Chief Investment Officer at Plurimi. Well, Patrick, real yields are rising. Dollar bears may feel some pressure. I have to say it's getting really interesting on the markets. Where do you see it going?
I think it makes sense that yields are rising and you're starting to see real yields move from below -1% to negative fractions of a percent. That's still very accommodative. It's still risk on, in my opinion. And all markets, as you've been talking about, are pointing towards reflation, whether it's commodity, whether it's bond yields, equity prices. It's an easy case to make right now. The reflationary backdrop with the economies reopening. Manufacturing PMIs are at 58 in Europe now. They're showing strength. Services, it's very clear they're going to have a strong balance in the coming months as economies reopen. So I think that backdrop holds. I think asset prices probably makes sense at this point. You already see tight markets in commodities when the economy is nowhere near its potential. As the economy reaches its potential, unless you get a lot more supply on stream, you're going to see continued tightness.
But Patrick, I mean, there's either the benign view, which is basically, you know, the Fed will look through inflation and all will be rosy, or actually the Fed, to get a grapple on inflation, could hurt the world economy or certainly its growth. Where do you stand on this?
Yeah, I think Powell will make it very clear that he'll embrace inflation rather than fight inflation. I think he'll say inflation will happen, it'll be transitory, it's a step we'll go through to get back to an economy that's at full potential, and he won't be talking up any steps or measures he'll take to talk about it. The first hike is still way off, and I think this week, as he's in his testimony, he'll say that's still way off. He may say we're thinking about raising, which would be slightly hawkish, but it is very far way off, and I think Powell will repeat that message many times this week.
The first hike, I think, is now being priced in 2022, and last week, Larry Summers was on with David Weston saying he thinks the Fed is going to hike rates sooner than later. I spoke with Howard Lutnick a little bit after that at Cantor Fitzgerald. He thinks, well, he agrees that it's going to be sooner than later. Is it the sequencing that makes you convinced it's not going to happen for a while, or do you just consider 2022 to be pretty far off from now?
Well, 2022, if you get to the back end of it, I suppose that's still pretty far off, but the sequencing is important. They don't want bond purchases to be happening at a time when they're hiking interest rates. So they've indicated that sequencing will be the well, they don't even call it QE, I suppose, but the bond buying, they'll really want to see that stop before they go on to a hiking regime. So I think you could see it end of 2022 at the earliest. I think more likely 2023. He'll have to navigate through potential taper tantrums, and I think that will basically rein in any hawkish thoughts he has.
We have a great story on the Bloomberg terminal today showing that Biden wants an even bigger stimulus package after this current $1.9 trillion deal is dealt with. Do you expect that we're going to see $2 trillion on infrastructure? Do you expect that we're going to see more money spent other than that, putting Americans to work?
I do, actually. I think this stimulus isn't very much. It's got very little in the way of infrastructure. And I think with what we saw with the Texas grid, infrastructure is needed. It's needed everywhere in the United States. And you get a much higher bang for your buck with infrastructure spend. You get a multiplier on that, whereas when you hand out money for direct consumption with transfers direct to citizens, you get a much lower multiplier on that. So I do think they'll get the $1.9 trillion through, and towards the end of the year, they'll make the case for the needed infrastructure, and that'll probably happen and be a bit of a boost for the economy in the second half of this year.
So that's on the fiscal front, and of course, we were just talking about the Fed keeping QE going until 2022 or perhaps even longer. Point of story is that's a lot of liquidity and a lot of cash in the system. That has been what many people point the finger at in terms of why asset prices have just gotten so lofty. Are you concerned about valuations at these levels?
I'm concerned about valuations, but I'm long risk assets. So I own junk bonds, I own equities, I own commodities, and it's because of exactly what you said. I don't think that changes. I think fiscal stimulus remains strong. I think central bank policy remains very accommodative. I don't think they're taking the foot off the gas, and valuations are very expensive on every measure we look at. Basically, equities are near or at all-time high multiples. On price to sales, they've never been higher. On EV to EBITDA, they've never been higher. But earnings yield versus 10-year yields, that's the big thing for me, and that's what's supporting equity prices and risk assets. You're still getting that earnings yield versus non-existent 10-year yield. So while central banks keep those forces in place, suppressing 10-year yields, I do think risk assets continue to benefit from the expected reflation.
Patrick is so excited because his kids are going back to school on March the 8th. I have to say, every parent in the UK cannot wait for Boris Johnson to announce that. And there's a great John Author's piece that kind of goes to the heart of what the UK can become in terms of vaccine rollouts, which of course is supporting the pound as well. Now, John Author is in a great piece of opinion, Bloomberg opinion today, says that sterling remains competitive, has room to appreciate much further. All in all, he basically says that Britain shot itself in the foot with Brexit, but it didn't shoot itself in the head. It's a really funny piece as well. Just go on to Bloomberg OPIN Go. Patrick, what's your take on UK assets? Are they suddenly going to become much more attractive? I know we're all richer because pound is more expensive, or it has risen, but is it just going to rise because it can track its own performance from here, given what they've been doing with the rollout of vaccine?
Yeah, I think that's the one big difference between us and Europe right now, is that the vaccines have been a great success story in the United Kingdom, and Europe, they're really struggling, failing really to get anywhere on the vaccines to this point. So incrementally, that will matter. You'd expect the UK economy to open up more quickly and maybe more sustainably. And the UK, just by its nature, is very cyclical. When the global economy does well, the UK and sterling tends to do well. So it's much like Germany within Europe. It's a beneficiary of the global economy, not just domestic, whereas a lot of the other European countries, much more driven by domestic demand and tourism, I suppose, that's really been hampered.
Patrick, thank you so much. Patrick Armstrong there from Plurimi Wealth stays us. We'll talk to him about sterling dynamics and exactly what we'll hear from the Chancellor on Budget Day, March the 3rd. Also, later today, Richard Thaler, Nobel Laureate and founder and principal at Full & Thaler Asset Management. I know he'll have a thing or two to say about treasuries. That interview, 3:30 p.m. in London, 10:30 a.m. in New York, and this is Bloomberg.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Here's AJ.
When are you going back into the office?
I don't know, Dad.
Well, we have a safety net. We'll be okay, right?
Heading into retirement, you want to follow your passions. Bright House Smart Care is a hybrid life insurance and long-term care product. It protects your family while providing long-term care coverage should you need it. Talk to your advisor. Bright House Financial. Build for what's ahead.
The Harry's razor is not the same. Our razors have 5 German-engineered blades designed to stay sharp, so you can enjoy lasting comfort. And we never upcharge you for high quality. Harry's. Available in store and at harrys.com.
Looks good, guys. Success! It's off in right place, right time. Fiverr gets that. From graphic design to web development. We're even a PR expert for things like, I don't know, booking a press conference. Fiverr has the freelancers to get you where you want to be. Is this a lobby? This is not a hotel.
Get some coin, save some coin. Osprey Bitcoin Trust is the lowest cost tradable Bitcoin product. Hold it in your brokerage account or your IRA, which saves even a little more coin.
What can you expect from ButcherBox? 100% grass-fed beef, organic free-range chicken, heritage breed pork, and so much more. From farmers who believe in raising animals with care, with no antibiotics or added hormones, ever. All with free shipping right to your door. Together, we can make a difference, one meal at a time. Visit butcherbox.com to learn more.
This is Bloomberg Surveillance, early edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Kaylee Lyons in New York. Now, still with us is Patrick Armstrong, Chief Investment Officer at Plurimi Wealth. Patrick, one of the big corporate stories, of course, that we're watching today is Boeing. Airlines grounded dozens of the 777 by Boeing after the failure of a Pratt & Whitney engine showed debris over Denver. Do you own any Boeing, or is it just something that you don't want to touch, mainly because of we're in a pandemic and no one's traveling?
Yeah, I've looked at it several times, and we don't own any Boeing. It's never gotten to the point where I said I really want to have some of this. In 2019, it didn't make any profits. 2020, obviously, you wouldn't expect it to make any profits. But you've probably got to get about $20 profit for Boeing to make sense at $220 a share. And I don't see that for years to come, given with what we have in the pandemic. The airline companies themselves, which are the customers of Boeing, they've got their own financial difficulties. Their balance sheets have been impaired. We will see a sharp uptick in travel and demand, but I do think airlines will be as conservative as they can be for years to come, basically trying to repair their balance sheets rather than expending capital on new airplanes, delaying it for as long as they can.
So one of the main ways you're playing the reflation trade, Patrick, is through UBS and Citi buying the banks. Do you like the equity, the debt? Why these two?
Those banks, I like banks that have trading operations that central banks, when they buy bonds, it's essentially free money. Basically, you buy treasury, sell it back to the Fed. I like banks that have asset management arms that, again, are beneficiaries of all the Fed's policies pushing up asset prices. So I like the banks that have good trading operations, wealth management arms, and all banks are going to be a beneficiary of the steeper yield curve, where all of a sudden you'll start to get an interest rate margin. So we own the equities. We also, within bonds, our biggest positioning, we're not big fans of credit anymore, but we do like the AT1, the COCO bonds, and that's a reflationary play that reflation kills bonds because higher interest rates means lower bond prices. But we do think the profitability of banks benefit from the higher and the steeper yield curve. So you'll get at least a credit strengthening to offset maybe some of the interest rates drags that come with bonds.
Are you interested in, this, the possibility that Biden's going to spend even more fixing roads, bridges, and airports is interesting to me. Caterpillar would be a beneficiary. U.S. Steel, I know Cleveland Cliffs and Nucor have all been lobbying for it. Are you interested in some of those companies as a play on investment in infrastructure?
We've actually gone direct to the materials. So we own BHP, we own Silver, Pan American Silver, Shinetsu. We own broad materials companies rather than basically the machinery that'll be using those materials. So I think the first leg up you see in the copper prices, iron ore prices. Fortescue is another one we own. The next leg of it may be going into kind of the companies you're talking about right now, but I think we're still in the early stage where it's the higher commodity prices and BHP, you see its free cash flow, what it's going to be doing with dividends and share buybacks. I think those sectors are very attractive right now.
Do you expect that story to help UK stocks more broadly, given how heavily weighted the FTSE 100 is toward material stocks, for example?
I do. Coming into the year, I wasn't incredibly bullish because I thought all the fiscal stimulus would be focused on consumer and infrastructure would be forgotten. Just that's where the rhetoric was and that's where all the talk was. And now it does seem there is gaining momentum on the much needed infrastructure. So I actually do think that is going to be a leg up. And UK is a beneficiary, no doubt about it. UK is very materials and energy orientated. The banks are cyclical assets as well. Those are the big sectors apart from healthcare in the UK. So any reflationary trade does outsized benefit for the UK.
Is Sterling going to go above 150?
I don't think so. We'll see what the Bank of England does. They don't want to go negative. I don't think there's any need for them to go negative. But if you do see sterling moving to 150, I do think that impedes the recovery that the UK wants to generate. And a strong sterling is a sign of strength that the economy is recovering, but if it gets too strong, it does start to impede that recovery. So I do think the BOE might start to do measures, even though they wouldn't explicitly talk about the exchange rate. It does change a lot of the dynamics for the UK if we do get towards that 150 level.
Patrick, thanks so much. Patrick Armstrong there from Plurimi Wealth. Now, coming up on Bloomberg Surveillance, Mike Wilson, Morgan Stanley Chief U.S. Equity Strategist. That's coming up 12 p.m. in London, 7 a.m. in New York. This is Bloomberg.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
You could think getting commission-free trades is as good as it gets, but you know better. At Schwab, free means more. You get commission-free online trades and quality trade executions on our powerful platform. Plus the satisfaction guarantee. Expect more from your firm. Trade up to Schwab, the better place for traders.
the things all around you, where you learn, work, and fly. We help make them healthier. We are the people of ABM. For more than 100 years, we've been a leader in making spaces cleaner, from the things you touch to the air you breathe. Today, more than 100,000 of us are innovating to ensure spaces are more efficient, healthier, and safer. ABM, making spaces healthier for you.
Dad, I'm scared.
It's only human to care for those we love and also help light their way. It's why last year Chevron invested billions of dollars to bring affordable, reliable, ever cleaner energy to America.
Your daily dashboard from Fidelity. A visual snapshot of your investments, key portfolio events, all in one place. Because when it's decision time, you need Decision Tech. Only from Fidelity.
Sexuality is getting more and more free from social norms, and that really brings a fluidity to this human phenomenon.
Technology can help people be liberated and use that time to discover their desires.
It's my hope that we'll really come to terms with the distinction between sex and gender. Gender is not a binary, and sexuality exists on a spectrum.
Hyundai Motor, connecting art and technology.
PNC Bank believes that if an app can help you track your pizza,
Come on, Cody, where are you, buddy?
then your bank should have the technology to help you track your spending. Virtual Wallet was designed to change what people expect from their bank. Easily see what's free to spend and where you can save so you can budget even better.
Okay, he's got to be close.
He's $6 in the other direction. Make a left, make a left, make a left. He made a right again.
Virtual Wallet for digital banking. One way we're helping to make a difference at PNC Bank.
This is Bloomberg Surveillance, the early edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Kaylee Lines in New York. Now let's get straight to the Bloomberg. First word news, and airlines in the U.S., Japan, and South Korea have grounded Boeing 777s following an explosive engine failure over the weekend. A United Airlines 777 made an emergency landing in Denver after one of its Pratt & Whitney engines suffered a fan blade failure, while parts of the engine rained down on a Denver suburb. Jeff Immelt's legacy is a dubious one. He'll be remembered as the chief executive who wrecked an iconic American company, General Electric. Well, Immelt's coming out with a book and tells his side of the story in an exclusive interview with Eric Schatzker.
There isn't a day that doesn't go by that I don't think about the company. There is a sense I have that if I let people down, that wears on me. Did all my decisions work? No, they didn't. But could anybody have tried harder or loved the company more or been more purposeful about the company than me? I don't think so.
Jeff Immelt's book is called Hot Seat. Now, in the UK, Prime Minister Boris Johnson will announce that all schools in England will reopen starting March the 8th. Johnson will be in Parliament outlining how the coronavirus lockdown will be lifted over the next few months. More social contact will be allowed from March 29th. That includes outdoor gatherings of either 6 people or 2 households. Now, I know there's quite a lot going on with COVID news. We caught up, Matt, with our Sam Fazeli over news that actually, because of an Israeli study, we now think that it's much more difficult once you have the vaccine to be contagious and to infect others. I say I'm crying victory because so many people in the UK are excited that schools will reopen, but it's not easy. You know, no one wants their kids to be illiterate, but you also need to make sure that it doesn't spread the vaccine further.
Yeah, absolutely. I mean, there was a recent study by the Technical University here in Berlin that showed that the virus spreads much faster in classrooms and open plan offices than it does, for example, in movie theaters or in restaurants. So, you know, I realize it's difficult to have kids at home, but you may see numbers, if this study is correct, starting to tick higher again when they go back to school.
Yeah, and Matt, it's a really interesting question for the school reopening effort here in the U.S. because the Biden administration wants that to happen shortly after the first 100 days, which would be the end of April. The CDC says it's safe. The messaging from the administration is that it's safe, but there's an issue with teachers saying we don't want to go back into the classroom until we're vaccinated, and the question remains whether or not that is truly safe, and what you're indicating, Matt, is maybe it's not going to be.
Yeah, and I guess the concern is that, of course, it's public service, right? If you're, you know, a lot of the poor kids don't have access to these, so it's very difficult for them to learn, and we always have to look at, I guess, the social cohesion and making sure that everyone has access to good education. Now, coming up, we'll talk a lot more about schools reopening and, you know, the vaccine, the underlying virology, of course, of what we're seeing, and whether if you open schools whilst you're vaccinating, it leads to more mutant variants. Dr. Lucy McBride, Vauxhall internist, internal medicine physician, joins us shortly. This is Bloomberg.
I think what we're seeing during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance, the early edition. I'm Francine Lackman, London, Matt Miller in Berlin, Kaylee Lyons in New York. Now, we're just getting some breaking news. We understand that China, this is according to Dow Jones, although there have been rumors out there over the last couple of days that China plans to change the group selecting Hong Kong's leader. Now, de facto, what this would mean is that basically they plan to curb the influence of Hong Kong opposition groups on a body that selects the city's top officials. So they would take, seats away from pro-democracy politicians and had them actually to pro-Beijing loyalists. catalyst. Now, this is according to people familiar with the story. Of course, we need to see whether that goes ahead, but certainly it's in the same vein or the same trajectory as we've seen Hong Kong trying to crack down on pro-democracy protesters over the last 18 months or so.
Yeah, absolutely. I mean, I don't think it's terribly surprising. It seems to be an evolution of the policy that they've been following, but it'll be interesting to see if it's confirmed and what kind of reaction we see in markets.
Yeah, the other story, of course, all about reflation and treasuries. Kaylee, what are you seeing in the markets?
Well, I'm seeing a lot of red on my screen this morning, Francine. We have about 4 hours to go until the opening bell, and it does look like it is going to be a negative open here in the U.S. Futures pointing lower by about 26 points on the S&P 500, but it is tech that is really bearing the brunt of the selling. NASDAQ 100 futures down a full 1 percentage point. A large part of the story has to do what is going on in the bond market, that reflation trade, as you were talking about, Francine. What we really need to be paying attention to, though, is real yields, which strip out inflation, continuing to inch higher. The 10-year real yield rate sitting at about negative 80 basis points. Yes, still negative, potentially not anything to worry too much about yet, but it still could weigh on risk assets if it continues to inch higher and at a faster pace. Staying with the bond market, we know that the spread between 5 and 30-year yields hit the steepest since 2014. We have come off a touch from those levels, still though sitting around 155 basis points separating those two as the selling really continues in duration. I also want to talk about one other part of the reflation trade that is just roaring ahead, and that is in metals, specifically copper, up for a third day above $9,000 a ton in the London trade for the first time since 2011. Aside from that broader reflation story, the narrative really is one about not enough supply being available to meet the demand of a growing, once again, global economy. So that is taking not just copper, but metals broadly across the spectrum higher. Matt, nickel hitting $20,000 a ton in today's session, Matt.
All right, I am looking here at the big picture, global infection curve. You can see here on top, because of lockouts and the starting of the vaccine, it started to roll over, which is certainly good news. Of course, the vaccine didn't come until much later in the pandemic. That's why the bottom chart is shorter. You can see that at the beginning, we got a big bump as the vaccines started to get passed out and put into arms. That's rolled over a little bit, but we hope, obviously, it stays at these levels. There was an interesting opinion piece last week, Francine, in the Wall Street Journal by Dr. Marty Makary. He's a professor at the Johns Hopkins School of Medicine and the Bloomberg School of Public Health. He says he thinks we could reach herd immunity by April in the U.S. because his research indicates that 2/3 of the American population have already been infected or at least exposed enough to be inoculated.
I mean, 2/3 is an extraordinary number. We don't have similar figures for the UK, and I haven't seen him talk about the UK. Here in the UK, the Prime Minister also expected to announce that all schools in England will reopen from March the 8th. Meanwhile, new data from Israel show Pfizer and BioNTech's COVID shot stops the vast majority of recipients becoming infected. Now, it's the first real-world indication that immunization could curb transmission of coronavirus. Well, joining us now is Lucy McBride, internal medicine physician at Foxhall Internists. Dr. McBride, thank you for joining us. I know Matt has a lot of questions about herd immunity. My question is more on the Pfizer-BioNTech vaccine. I read it out to my husband yesterday as he crossed the Bloomberg terminal, and he said, oh, what's the trial data? How many people, do we rely on this? And actually, we don't know yet. Do you believe that this study is, it's legitimate, but is it, substantive enough to actually taken as gospel?
Thank you for having me this morning. It's great to be here. What's really nice to see in this new study out of Israel is the real world data on how very, very nominal vaccination is at curbing the case rates, cutting the death rate, and then ultimately we think cutting the risk for transmission. When we look at the clinical trial data, that's all before the vaccine is reaching large swaths of the population. So it's always beautiful to see real world data back up and even, corroborate further what the vaccine trial data shows, which is that these vaccines are truly incredible.
But what I don't understand, and again, the scientific community doesn't really agree on this. So first of all, it's how do we achieve herd immunity? When do we go back to normal? Are we going to be stuck in this pattern of people getting vaccinated but still having to social distance for the next 2 years because of variants?
So let's frame this. We're in a race globally between two key factors. If you think about two runners on a track, you've got one is the virus and its ability to mutate. And the longer the virus is given the chance to, infect people globally and in communities, the longer we give it the chance to mutate and outsmart our body's immune reaction to it or immunity from vaccination. The other runner on the track is our human ability to vaccinate large swaths of the population. So we will achieve herd immunity when we are winning that race, when the human ability to vaccinate people, get vaccines into people's arms, overtakes the virus's ability to mutate and outsmart immunity.
The interesting thing I took from the Steven Soderbergh film Contagion, I'm sure you've seen it, Dr. McBride, is that Matt Damon is naturally immune to the movie virus. The Wall Street Journal editorial, Dr. Marty Makary, says he thinks 55% of Americans may have a natural immunity, plus the fact that we've got 15% of people who've gotten at least one shot in the arm already, and he thinks 2/3 of the American public have been exposed to the virus enough to have been inoculated. So he thinks herd immunity will come by April. That seems really soon. What do you think?
Yes, I mean, this is a really, really heated debate in the scientific community, which I'm lucky to be part of. And, I think that is, while I am an optimist, I think that is overly optimistic. What I like that I've heard coming out of the Bloomberg School of Public Health at the Johns Hopkins School of Public Health is the real recognition of what scientists and people in the medical field like myself suspect and think is already probably true, that the vaccine not only protects against disease and death, it also likely protects us from transmission. But I don't think April is realistic, as much as I would like to say that.
So let me also ask you about recurring vaccinations. I mean, with the flu, the typical, I guess what the Spanish flu has morphed into today, we have to get vaccinated again every single year. Is that going to be the same with the COVID vaccination? Are new mutations going to mean every spring or every fall we have to get new vaccinations?
So remember, the question is this: what is the durability of the immunity that we achieve when we are infected with coronavirus or we are vaccinated against coronavirus? How long does that immunity last? And the answer to that question is crucial, and that will help us determine, how often we need to get booster shots. But if you go back to that race, the race between the viral ingenuity and our ability to vaccinate wide swaths of the population, the question is only going to be answered in real time. We're watching this phenomenon play out in real time. So when we learn that the variants have outsmarted our immune system, then we will know that we need to have booster shots. And by the way, the pharmaceutical companies are already working overtime to develop boosters should we need them.
Dr. McBride, let's talk about schools. I don't know if you can tell, but Francine is quite excited that UK schools are opening again on March 8th. Here in the US, they're at least hoping to open K-8 schools by the end of April. But there's a raging debate going on whether or not that is going to be safe for teachers if they aren't vaccinated already. Should they feel safe returning to school if they haven't gotten their shot yet?
So it's a really good question. I'm a mom of 3 kids who are desperate to go back to school. And I myself understand very well how important it is for their social emotional health. Not only that, for our economy and for working parents, school is essential. So here's the thing, you can't just say it's safe to open schools. You have to have risk mitigation in place, right? So it's safe to open schools if, and the if is crucial. The if is if you have the ability to, well ventilate the school, distance kids and teachers and staff and faculty from one another, if there's adequate hand washing, and of course that masks are enforced. I personally do not believe that every single teacher must be vaccinated before schools can be open, because if you have adequate and aggressive risk mitigation elements, you're by definition protecting teachers. But that is controversial. I think that, there's no one size fits all for every school or every teacher or every child around the country. But I think there are ways to make it work. And it's been shown in studies to work in certain areas of the world where case rates even are high.
Lucy, thanks so much. Lucy McBride, I'm not too worried about my kids' social well-being. I just want them to be able to write their name again. Internal medicine physician at Foxhall Internists. Now, coming up in the next hour, we continue, of course, our conversation on COVID vaccines with Joshua Sharfstein. He's Johns Hopkins Bloomberg School of Public Health Vice Dean. That's at 6:30 a.m. in New York, 11:30 a.m. in London. And this is Bloomberg.
Why are you running around the world saving the world from hunger? Why are you doing that?
I want to live in a world that I kind of believe everybody's doing as well as my daughters.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
This is Bloomberg Surveillance, early edition. I'm Kaylee Lyons in New York with Francine Lacqua in London and Matt Miller in Berlin. Well, Francine, Matt, one of the movers of the morning that I am watching is Boeing. Shares down around 3.5% in pre-market trading after a crash or a jet explosion over Denver in the U.S. over the weekend. Japan and South Korea grounding Boeing jets of the 777 over the weekend after one of its Pratt & Whitney engines suffered a fan blade failure. Now, the scare comes, of course, at an extremely sensitive time for the global aviation industry and a sensitive time for Boeing in particular, because remember, the 737 MAX, it's a best-selling jet that was grounded for the longest period on record, just cleared to fly again at the end of 2020, is just now starting to fly again. Now you have issues with the 777. And of course, this also comes at a time in which aviation broadly is really suffering because of the pandemic. So joining us now is Sid Phillip. He is Bloomberg News aviation reporter. Sid, can you just give us some context here on how important the 777 jet in particular is to Boeing? At least the 737 MAX we knew was its best-selling aircraft. That made it very critically important to the Boeing program. How big is the 777 for Boeing?
Morning. So yes, the 777 is obviously a very important aircraft for Boeing because it is the mainstay of long-haul travel. But I think at this point it's pretty important to distinguish that the plane that affected, the specific variant, it is a small fraction of the overall 777 population. And obviously, you've seen the likes of United holding operations with 24 planes, as well as airlines in Japan and South Korea also grounding jets with that particular engine variant. That's the Pratt & Whitney 4000 variant, which is on that particular jet.
Right. Well, there aren't really that many 777s out there with that engine variant. I think only about 60 in the air and maybe about 60 in storage right now. Sid, why doesn't Boeing, though, I mean, are they getting more serious about maintenance? Are they getting more serious about demands that these planes be checked on more carefully? Because this is really bad for their reputation. It wasn't a crash. We should make clear that was not a crash. But if you're flying in a plane and the engine blows up, it's still pretty scary, and you might not want to fly in that kind of plane again.
Exactly. I mean, it is pretty scary, and obviously that's why Boeing has recommended suspending operations with the aircraft that are in service as well as the ones that are in storage until the FAA identifies the appropriate inspection protocol. That's what Boeing said, and it's also supported the decisions by the FAA and the Japanese Civil Aviation Bureau to temporarily ground these aircraft that are powered by these particular engines.
Sid, I have to say it's pretty extraordinary to just look at, pictures of engine parts falling off after takeoff. Does it mean that more airlines will buy their rival instead of new planes from Boeing, or do you expect this, investigation to be short-lived?
I think it's still early days, but I think that this is not so much an issue because given the fact that these planes that are powered by the Pratt & Whitney particular variants, those ones are pretty old. So it isn't really sort of an issue, I think, for at the moment, because Pratt & Whitney hasn't really made 777 engines for a while. So I don't think it's a particular
Airbus
issue.
Is in a great place, Sid.
Absolutely.
I mean, Airbus has not only have they gotten, they haven't gotten as unlucky as Boeing, if you want to look at it like that, but Boeing also has the big bet on wide-body planes, which nobody wants anymore, right? So Airbus is really in a much better position.
Absolutely. At the moment, narrow-body planes are the ones that airlines want because of the fact that wide-body planes are more affected by travel restrictions, and the expectation is that the market for narrow-body planes like the A320 will recover faster than the market for wide-body planes, which obviously have to worry about many other travel restrictions and across countries and across continents.
Sid, thanks so much. Sid Phillip, of course, our transport and aviation expert at Bloomberg News. Now, coming up a little bit later, former GE Chief Executive Jeff Immelt. You can catch that interview with Eric Schatzker at 5 p.m. in New York, 10 p.m. in London. They'll focus, of course, on legacy. This is Bloomberg.
These solar arrays that we're going to install are going to be about half the size of the existing solar arrays that we have on the International Space Station. But because of the advances in technology over the years, they're going to provide about twice the power in just half of the area that the existing solar arrays cover.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
You really want to get a lot of aid out the door fast. You now have to get people through these 6-7 months of pandemic, and we need to have the economy poised to make a fast comeback once it can.
I'd rather see us investing money that expands the economy's capacity than simply making transfer payments.
We are hoping that there'll be a strong recovery. There's every reason to believe we will, especially if Biden's recovery rescue plan gets enacted.
Spending generously is not a competing with a longer run investment program. In fact, it's a precondition for that longer run investment program. We need to get people back to work. We need to get people through this with minimum damage.
A roundup, there are voices on President Biden's stimulus package. Now, Tom Keene, co-anchor of Bloomberg Surveillance Simulcast, joins us now. Tom, I know you have a chart to dazzle me on a Monday morning. This is what we should do. You should come on, put a chart, and we all guess what it is.
I'm going to get my bow tie straight first. I mean, that's important. Here's a chart, folks. This is Steve Hanke and John Greenwood writing in the Wall Street Journal about M2. That's a money supply. It's something Lawrence Kudlow's big on, and others are not, including the group we just heard from, Krugman, Summers, and Stiglitz. But this is the huge expansion in M2 as compared to nominal GDP. Years of stasis and stability. And then off the financial crisis, the leg up and the explosion of M2 to GDP that we see right now. And this is sets us up, Francine, for March, which is inflation or not.
Yeah, global reflation, easy money outweighing U.S. growth. What does it mean for dollar bears?
Well, what it means for dollar bears is ambiguous. Kit Jukes, with the smartest research note this morning, makes very clear there's like sequential steps to get back to a weak dollar position, and we're just not there again. It is a fascinating tape as we start the simulcast, Francine. Fascinating tape here on this battle over the debate, I should say, over reflation. Even better, Lisa Bramowitz doesn't agree with John Farrow, so it's like it's mint. It's like going to be great entertainment. On the show, Mike Wilson on the equity markets.
150 on sterling. Does it mean you're not going to come and see me in Europe anymore, in London?
Got that right.
If that's what we get.
Well, we're seeing weak dollar. We're not there yet. I mean, we're broke, but, it's going to get worse here based on what a lot of people say. This is important, though, Francine. I don't hear a lot of people talking strong dollar, but talking resilient dollar. But the big debate into the end of this is that distinction between Steve Hanke of the Johns Hopkins University and Professor Summers with that important essay in the Washington Post.
Yeah, Tom's just really focused on when UK schools can reopen, because that has an indication of when
that.
schools
Very
reopen.
Impressive, yeah.
And then, we all refocus on yields and real yields and treasuries when that's possible. Tom Keene, co-anchor of Bloomberg Surveillance Simulcast, joining us, as always, with some really cool charts. Now, I look at what else we're watching as the trading day unfolds. Matt, I know you're focused on commodities.
Yeah, very much so. And we just spoke with Patrick Armstrong from Plurimi. He's investing in commodities, and that's his one of his plays on reflation. So this is tin. A viewer wrote in last week and said, all you guys ever talk about is Dr. Copper. What about tin? Hillary found the spread between spot prices and LME futures, and it's just soaring here to levels we haven't seen since 1996. So everywhere you look in commodities right now, and metals especially, you see reflation, but I think tin is really interesting and still really necessary. You need it to make glass and to make things no longer corrosive. It's still pretty cool metal, tin.
Yeah, Matt, well, that's obviously part of the reflation trade, and a big part of that reflation narrative is more fiscal stimulus coming from the Biden administration. So I'm watching Treasury Secretary Janet Yellen. She's going to be speaking at the New York Times Deal Book Conference a little later on this morning, and anything she says regarding that nearly $2 trillion stimulus package, of course, will be of interest. She continues to make the point that you can't go too big, that the risk is actually going too small, but we will see what she says and how that may set up the remarks from Jerome Powell in Congress later on this week, Francine.
Yeah, there's quite a lot going on. So, you know, we have the Jay Powell testimony as well. We're looking at Janet Yellen. We're looking at commodities, treasuries, real yield, and the yield curve. And then there's a story that we broke about 20 minutes ago on Beijing, planning to change how the group is selected for the Hong Kong leader. So I would actually focus a little bit on that. Again, it means that it will curb the influence on Hong Kong opposition groups, on a body that then selects the leader. Again, this goes in the trajectory that Beijing was going in, how to dealing with Hong Kong, but you could, at the margin, have repercussions. Possibly a little bit more protests on the road, and we'll see whether it has implications for companies wanting to have a stronghold in Hong Kong or not. Now, coming up in the next hour, Joe Quinlan, Merrill and Bank of America Private Bank Head of Chief Investment Officer Market Strategy. That's coming up shortly. This is Bloomberg.
We have a very good chance to not only have positive growth, but perhaps a somewhat more encouraging positive growth.
The rebound in the second and third quarter will be quite strong because the expectation is that the vaccine will help clear the way to less restrictive lockdown.
We are going to have a recovery, but it's going to be an uneven recovery.
Of course, it will have direct impact on our growth forecast. And it will be very difficult to reach 6% of growth.
You're going to get a roaring 20s type of recovery and a boom period.
We are certainly seeing ourselves towards the second quarter being in almost opening the economy as much as one can.
We should not be too quick to cut back on the expansionary fiscal policy.
We'll get there. The question is not a question of if, it's a question of more when.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
business sector has really, really taken a terrible hit.
Things are happening much more quickly. There's just no stabilizers.
You've got a lot of buying power out there with pent-up demand that continues to build.
We have seen people take the money that they get from the government and their income and spend it like mad.
I do think inflation is an eventuality, and that is the only thing that will probably knock the market off course. This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
From New York City for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Farrow. Futures down 0.75% on the S&P 500. Tom Keene, once again, it's about the bond market breaking down. Yields breaking out. We're up 3 basis points on 10s, north of 130.
Call it rate of change Monday, John. It's about the speed of movement that we're seeing here. A lot of good essays out, a lot of good research, all about inflation or no inflation, looking at the indicators. You can cut it, John, both ways.
It's the composition of the move and it's the pace. And it's toxic. The pace is fast. The composition, Tom, not just break-evens, not inflation. Real yields over the last week breaking out. That's the challenge to risk assets this morning.
Yeah, real yields are a moonshot, negative 0.79 from that negative 1.00. It's really, I looked at it a lot this morning, John, and it's really not a breakout yet, but we are right there that if it continues, that gets the attention of Wall Street.
Get me to Tuesday, Wednesday, Lisa. The Fed speak on deck this week.
Yeah, and the key question is how much of this reflation trade is Jay Powell going to tolerate? How much is the Fed going to take a look at how much yields are rising and get uncomfortable with it, potentially to signify that they're going to buy longer-term bonds? What's this balance of allowing growth to pick up while not creating financial instability, John?
Really interesting week coming up. Let's get the price action this Friday morning. Good morning, Monday morning, rather. I got through the weekend, just about. I hope you did too. Futures down 3/4 Friday. Where did Friday come from? Down 29 on the S&P. Having too much fun
someone
already.
had fun this weekend.
Yields up 3 basis points to 137, 1.367%. And in the FX market, euro dollar, I'll just keep talking, 121.28. Euro up about 0.1%. Lisa, the crude move, the copper move, really big over the last couple of weeks.
Yeah, and it's stemming from shortages, and it's also stemming from this reflation trade that we keep talking about, and it really puts central bankers in the front and center in terms of how they're going to respond to this, whether they're going to allow financial conditions to tighten naturally or whether they might even encourage them to avoid some sort of overheating later. That seems like it's not likely. Christine Lagarde will be among the first in the parade of central bankers that will be speaking this week. She's speaking at 8:45 a.m. And then at 9 a.m., Janet Yellen, Treasury Secretary, will speak at a New York Times Deal Book conference. Very interesting to hear how she views overheating as less of a concern than not going far enough. You do have to wonder whether policymakers are taking too much of a lesson from what we've seen over recent decades. Perhaps this composition has changed with both monetary and fiscal stimulus and a disruption that we have not seen since 1918, which is idiosyncratic in its nature. And then at 1 p.m., the House Budget Committee...
6:02:40.
Really?
Yeah, idiosyncratic.
Really, Tom? Anything else?
No, just existential.
All right, I'm going to keep going. Okay, 1 p.m. This is important. House Democrats are going to do the budget markup for this $1.9 trillion stimulus bill. Expect heated debate among Democrats about that $15 minimum wage provision, which is garnering a lot of controversy among the Democrats. But this is the bill that they're hoping to get through Senate by the end of the next 3 weeks. They're hoping to fast track this among a Republican pushback, John. And this is a key part of why people are buying into the reflation technique. Go ahead, Tom.
I'm really glad, Lisa, you brought this up because, John, this is really important. This percolated over the weekend that we're finally here on stimulus bill. This with the great vaccine news. I mean, it's going to be fascinating, really, the next 48 hours in Washington.
Yeah, so let's fold that over into the price action, Tom. So we've got this massive fiscal package on deck in the United States and Treasury yields are breaking out with it. Here's the problem for the rest of the world. Eric Nielsen of UniCredit wrote about this over the weekend. Are we seeing an unwarranted tightening of financial conditions elsewhere? Because Treasury yields breaking out, driven by a monster fiscal plan. That's a monster US fiscal stimulus plan. It's not a German fiscal stimulus plan. It's not an Australian fiscal stimulus plan. Yet in Germany, we've seen yields break out a lot. We've seen Australian yields break out even more. This morning, what I think is interesting, Tom, and worth noting, 10-year yields not moved this